Dennis, I believe, and you're way better at this than I am, when you cover a short and you're wrong, you have to show cash, right?
Well, you will create cash in the process of doing it. You will create less cash than you started with, no question. But what they're having to do, and what you're seeing in stock index futures around the board, is that they're also having to raise cash to pay for the losses that they are suffering in the short position, and they're selling other stocks. So this is exactly what happened in 1902 with Northern Pacific. Other stocks collapsed. Northern Pacific went from 40 and 50 and 60 and $80 a share to 1,000, but they had to sell other stocks to raise cash to pay for the losses. That's what's happening now, and you're getting weakness in the broad market and strength only in GameStop. This will end. It'll end in the next week or two, but it's going to be ugly, and there'll be more than just one or two hedge funds that find themselves in the dinger.
Dennis, I don't want to talk about the scope and scale, the magnitude from 1998 in LTCM. I'm much more interested in the new technology, the speed of trading, all the intraday stuff. And folks, as you all know, I'm a complete amateur at it. But it gets down to the delta, the rates of change, the calculus of how we do our financial system. Is the average guy out there affected by the new technology and this buildup of derivative leverages?
Well, the public that is following stock markets right now, trading using their unemployment benefits, for lack of a better term, and enjoying themselves, are having great benefits evolving, and this may continue for a while. These things always end in tears. There will always be ugliness that follows. People become the public will become too certain that they are going to be right going forward. They will average into other trades. Those trades will go against them. When it will stop is anybody's guess. But these things always end in exactly the same manner. They end in tears. But right now, they're ending in joy.
Is there anything that could be systemic?
I have my doubts as to whether it'll be systemic, other than the fact that the government will come in and try to over-regulate what has just happened. But do I think that this will be deleterious to the economy as a whole? I doubt it. Just like we survived LTCM, we survived the dot-com era. The economy survived 1902. It survived panics in the past. It'll survive again. The only problem shall be that the government, given a new administration, will use it as a reason to overregulate. That's the one problem that I see.
Dennis Gartman, well timed to have you on today. Thank you so much. We'll see you tomorrow. Dennis Gartman with Akron, their endowment fund, and of course also for years a legendary Gartman letter. It is Fed Day, a rate decision. Caroline Hyde leading our coverage at 2 p.m. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning, everyone. Bloomberg surveillance, pandemic news. AstraZeneca, with all the challenges they have, they are out of the vaccine call. This with the European Union. We'll have much more on that. Just out right now. Futures in negative 15. GameStop under $300 a share. This is Bloomberg. Good morning.
To be an action that was either illegal or caused disruption. And this was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom Francine from London and New York. Tom, a lot of animosity between the EU and AstraZeneca. We know that they were meant to have a call between the leadership at the Commission, of course, of AstraZeneca to try and figure out the differences. We understand now that AstraZeneca has pulled out of that vaccine call. Now, it has been a tense game between the two sides. Again, the EU is actually pressing the company to reconsider the move because it wants executives to provide more details on what is happening to the planned deliveries of shots. We know also that the AstraZeneca chief executive went all the way, actually, in speaking to a number of press in Italy, in France, in Germany yesterday to explain exactly their positions. And what comes out of it, Tom, it's a great interview, is basically things are not so simple to deliver some of these vaccines.
It has been something, Francine. The news flow today, folks, is extraordinary. Let me get over here on the 47 screens of Bloomberg. GameStop gives way. We had a high of 365, and we're now at 218, 220, plunging back to some form of morning support on GameStop. This has been hugely anticipated, and Sally Blackwell and our team in the United Kingdom have the story. Shonali Basak, our chief banking reporter, joins us now. Shonali, it was just a matter of time until the U.S. retail banking onslaught approached the shores of Europe. This morning, J.P. Morgan does that, but Shonali, they do it in a different way, don't they?
They surely do, and they're trying to do it. J.P. Morgan in particular is trying to do it with not such a heavy footprint in terms of tons of branches everywhere or a huge cost base, right? They're trying to go digital.
Well, trying to go digital, I would suggest they own digital in America. There's some other good competitors at that as well. What is the separation of U.S. investment in digital versus what we see in the United Kingdom and in Europe?
Well, for one thing, Tom, Jamie Dimon is obsessive about it. He talks about it all the time. It's a huge investment for J.P. Morgan. It's not to say that there are a bunch of robots walking around the bank. They're already hiring 400 people as they move abroad into the U.K. for the first time for their retail bank. You know, of course, this is a big challenge to the big established retail banks, but this is a nod to all the neobanks, all of the startup lenders like Monzo and Starling Bank that have been raising money, have been all becoming unicorns, and you know have had a very mixed track record of success in the UK.
Shonali, why the UK and not France or Italy? The UK has just gone through Brexit. If you look at the number of companies that could go bust, it doesn't look like a great picture over the next 2 to 3 years.
You know, that's a good question, Fan, because this is something that J.P. Morgan does have larger ambitions for. We have Michelle Davis reporting that this is really going to become a global effort at some point. My first response would be there's still a lot of talent there in the UK, and there's also a lot of regulations that the bank can really get through first before they start to put up perches other places across Europe as well as around the world.
Thank you so much, Shonali Basak, there, Bloomberg Wall Street correspondent. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom. Republican Senator Rand Paul lost a battle, but he may have won the war. Paul's bid to question the constitutionality of former President Trump's impeachment trial lost on a vote of 55 to 54, but the vote serves as a rough proxy for the eventual verdict, and it falls well short of the two-thirds majority needed for a conviction. Federal law enforcement officials are defending the pace of their investigation into the riot at the U.S. Capitol. They say they've charged more than 200 people so far, and more charges are expected. Investigators are offering a reward for whoever is responsible for placing pipe bombs near the Democratic and Republican headquarters in Washington. President Biden will order another 200 million doses of coronavirus vaccines. He would also temporarily speed up shipments for states. The new purchases of Pfizer and Moderna vaccines would increase government orders by about 50% to 600 million shots. Meanwhile, a greater share of the American public wants to get a coronavirus vaccine as soon as possible. That's compared with those surveyed in December. According to a poll by the Kaiser Family Foundation, almost half the adults surveyed were enthusiastic about getting the shots. In December, only 34% were. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. On GameStop, we've come off the highs. 365 was a spike up intraday, but I do want to emphasize that we're still substantially above the so-called close on Friday, 147. Oh, how convenient. We go out $100 here on GameStop this morning. We've come back and we're somewhat near something on the order of a distribution, as Luis Yamato would say, at 220. We're just above that level right now. We'll continue to monitor the story. Right now, we monitor over to Washington. Emily Wilkins joins us, our Bloomberg congressional reporter. I know there's a first 100 days, and I know there's a big splash at the beginning where we do this the first day, this the second day. Are we past the first couple days splash of the Biden administration, Emily?
I don't think that we're quite past that first initial period where Biden can get in and influence things, but we're definitely seeing the idealism of the presidential campaign hit the reality that's in Congress. We're seeing some of Biden's moves being blocked by the courts. We are seeing him try to work and negotiate with a number of lawmakers on both sides of the aisle who are skeptical about his big coronavirus stimulus plan. And yesterday we saw a vote that showed that there's still a lot of partisanship in the Senate when it comes to the events of January 6th and the siege on the Capitol.
Well, I mean, the votes are there and the stories are there as well today. What is the focus today of the new Democratic majority, the coalescence of the House and the Senate? I mean, away from impeachment, let's set that aside for a moment. What are they focused on?
Well, they're starting to focus on Biden's $1.9 trillion coronavirus stimulus and exactly what that will look like. The Biden administration does want this to pass in a bipartisan fashion. They want to work with Republicans and they want to get Republicans on board. But they also want to pass it quickly, and those two goals might not exactly align with each other. So Democrats have been telling each other, beginning to prepare to pass a stimulus bill through a process known as budget reconciliation. It's pretty wonky, but you basically just need to know that Democrats have the votes. As long as all of the Democrats vote for it, they can get Biden's plan through without any Republican support.
Emily, what can you tell us? I mean, yesterday, quite late, the news agenda, certainly on U.S. foreign policy, was all about this call between President Biden and President Putin. Does that really lay out the foundations of, what the U.S. will be in terms of an ally to the people closest to them over the next 4 years?
I think Biden and the White House are really intentional in making sure not only to have this call take on sort of a more aggressive tone than we saw from the Trump administration, but really make sure that that was well known. One of the big pieces of criticism against the Trump administration was their sort of friendly, lax attitude towards Russia, and particularly after we've seen news of the hacking that's come from that country and other items. The Biden administration is really looking to strike a much more firm tone here in how they will handle relationships with that country.
Thank you so much, our Emily Wilkins there, Bloomberg government congressional reporter. Now, up next, we track COVID-19. We speak with Lauren Sauer, Johns Hopkins University Associate Professor of Emergency Medicine. We'll have, of course, a look at the vaccinations. We'll have a look at the spat between AstraZeneca and Europe. This is Bloomberg.
Continues to be, recovering well. And with the opening up that was decided at the last five-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. but it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix and Tom Keene. It's a Fed day. There's all sorts of stuff going on. Is there any snow in London? I mean, are we done with the snow?
No, it's gone.
It's gone, yeah.
We're done with the snow. But we may have a new challenging bank, at least online with JP Morgan. So that we're not lacking news, Tom, even if there's no snow.
Did you pay the children for shoveling like they did in the 4 feet of snow, or did you wait and say, look, the snow's gone, that's it?
Yeah, we're now working on the trees, the leaves, Tom. They're falling. They're always after money, and I'm always after some kind of activity for them.
A chart right now on the debt market, not on GameStop and who owns debt there. We'll monitor GameStop here as we go along. But on the debt market, it's real simple. What's a negative yielding debt out there? And the answer is up, up, up. And we forget we're really buttressed up against new highs for negative yielding debt. Liz Capo-McCormick and Craig Torres and the team at Bloomberg have tried to sum up the debt that's been discovered in a pandemic. It's an important statistic, and it's a U.S. GDP statistic. Liz Capo-McCormick joins us this morning with her years of expertise at Bloomberg. Liz, you get out to 20 trillion. What's a so what of a $20 trillion statistic?
Well, it's just, of course, it's a time when we had to do this. We needed governments to step in, or we might be in another depression. But it's a big price tag, like you're saying. And, I think we are just kind of turning a lens on it to say, rates are low now. We're getting this financing cheap around the world. But if things, kick off and we get going and the economy grows and we get out of this, we have a big price tag here.
What I love about your journalism is it's a global story. I'll be meeting with the managing director of the International Monetary Fund. And I don't know if it's my first question to Georgieva, but it's maybe my fourth question. Liz, I'll bring up your name. I know you're on good terms. And that is the effect of the debt buildup away from the rich countries over to the poor countries. How grim is it?
Right. And, they have a lot of other challenges that the developing nations don't have. So, to go up, it creates even more challenges. So it's tough. And they're struggling like all of us and to get vaccines and get out of this. So it's tough. And, you saw the IMF yesterday came out with their world outlook update. And, in some ways things are getting better, but in many ways it's still a challenge, right?
Liz, when you look at some of the things that, we need to spend a little bit more time on, I mean, what is the when should we start, being concerned about all of this debt creation?
Well, I think, you might have heard Janet Yellen during her confirmation hearings, this was brought up, what about this debt load? And she said, obviously Biden and the administration and Yellen and the Treasury are, pushing for this next round of stimulus. But she did say, debt is something we have to watch, but for now, rates are so low. This is a good time. We're getting it cheap. And Chair Powell at the Fed has also said, hey, my long-run view is, all this debt is not sustainable, but now is not the time. But I think it's just, the problem is you don't know, when, it's like anything else. It's like, you think you're good being long until things fall, and everything is rosy while rates are low. But we don't know when tide will turn and the vaccine distribution will be great and the economy will kick off. So it's kind of hard. It's like a teaser rate on a mortgage. You know, when that kicks off, you're in trouble. So it's hard to know, Francine, when trouble will brew. I mean, most people say rates are going to stay low for a long time. Central banks are going to remain very accommodative. Fed says they won't raise rates for a couple years. So it seems, and Yellen's, kind of alluded to that we will be in a low rate environment for a long while. But who knows? We've all been around long enough to see when tide turns. You don't know it's coming always.
Are the banks in a sound place enough to deal with anything they have on their balance sheet, including government bonds?
Well, that's the one good thing that, unlike the 2008 financial crisis where there was a lot of issues in the banking sector, which was kind of the heart of the crisis, and there was a lot of kind of, call it bad debt, mortgage debt and such. The banking system, especially in the U.S. and globally, is much more sound. So we're not in the midst of a banking crisis. This one is more that we've got a lot of sovereign debt after all this because, fiscal authorities did jump in a big way. So it's a matter of, a lot of companies last year, not just the ones struggling who needed money, but the ones just kind of trying to swoop in and grab low rate debt. We had record corporate issuance last year. So one of the issues is even if we don't have a huge kind of crisis from all this leverage, that it tends to slow growth when it starts to pick up because you have this debt load. Even think about it personally. If you had to pay a lot of bills, and things are getting better, you get a raise, it weighs you down. So that's one of the risks. It'll slow the recovery. It may weigh on companies' earnings down the road if they're just kind of trying to pay off this debt.
Liz, thank you so much. Liz Kaplan-McCormick, summing up the pandemic debt. That is a number, no doubt, that will grow. On GameStop, it's real simple. Round trip this morning. I want to be careful here. 147 up to a 230 level, and then we spiked up and come right back down to that 238 level. Right now, I just lost my chart here. Help me out, Matt, in my ear with where we are. 238. 238 on GameStop on the bid. 240. Yeah. Thank you, Francine. It's a different price. It's like gold. It's a different price in London. We've got GameStop going round trip today, but certainly the distortions tangible. CNBC reporting that Melvin Capital, the great shorter, is out. We will see how that is reported through the day. Please stay with us this morning, this Fed Day. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transform industry
buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Right now, we manage $76 billion of assets in China for Chinese, whether it be through our joint venture you're referring to or directly with institutions. The growth has been unbelievable. It was a record year again for our China business. In the last half of the year, they had something like $17 billion in net inflows. So it is an overnight success after 20 plus years in the marketplace. I think, frankly, the relations between U.S. and China is important. It was definitely creating complications for all of us that were operating there. Not in a material way, but I'd say it was uneasy as you were looking to the future. And I think it's really important for two world powers to be on the same page, and it's good for each country is good for the world. So I'm hopeful that that's what's going to happen as we look forward here.
Okay, it does feel like a little bit of a new day, safe to say?
Early days, but it sure does, yes. Yeah.
Well, let me also ask you just some of the things, we just have about a minute or so, a minute and a half left here, some of the things that we are talking about increasingly, whether it's Bitcoin, whether it's Robinhood, what of kind of some of the newer trends that are out there that you find interesting and that you think investors overall, folks in the financial community, in the investment management world need to pay attention to right now?
Yeah, so it's a good question. It all depends on who you are, right? But I think the reality still gets back to basics. Truly understand what you're trying to accomplish, what returns you're trying to get, what risks you're willing to take, and the basic of time horizons. Developments such as Bitcoin and the like, I think it's still early days. It's obviously very, very topical. You're seeing a lot of energy behind it right now. I'd say it's not for everybody, and my basic view is that very interesting, but you're going to see central banks in the game at some point too, and I think that puts the value of it at risk, quite frankly. So is that 2 years out, 3 years out? I don't know.
Yeah. Hey, one last thing. SPACs is another thing that they're just kind of exploding. Does it make you at least a little bit nervous in terms of what that might mean for the investment world? Does that look like a bubble to you? And just got about 30 seconds here.
Yeah. So anytime something grows that fast and it's so wonderful, it's probably good to question how long it's going to last. So I would warn the bubble camp, quite frankly. So.
Invesco Chief Executive Marty Flanagan, speaking with Bloomberg's Carol Massar. Now, joining us to talk about the vaccine to track COVID-19 and the level, of course, of distribution in the cold chain is Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. Lauren, thank you so much for joining us. Before we focus on the U.S., there's this massive spat between the AstraZeneca Chief Executive and Europe. Europe, that we need to mention, has not even approved this vaccine yet. Is there more and more concern amongst the scientific community that we're just going to see vaccine nationalism emerging?
I think there is, and not just the scientific community, but also the global health community. We have programs like COVAX, for example, where the focus is really equitable distribution across the globe. And I think this sort of spat highlights the challenges with equitable distribution. So countries with more resources are able to support vaccine development, vaccine production, even vaccine distribution. But that has to be supported broadly across the globe to make sure that lower resource countries also get access to the vaccine, because we are not safe until everyone begins to get vaccinated. And this fight between the EU and the UK and AstraZeneca just highlights the enormous complexities of following through with the initial commitments when the vaccine was just an idea or an unknown.
Lauren, as far as we understand, I know these are commercial commitments. They're trying to do as best they can. What are the challenges in actually making the vaccine? So you need to make the actual vaccine. So let's call it the formula, and then you need to produce the vials and then put those two together.
Yeah, the complexities of the supply chain, and particularly when you add in that addition of cold chain storage, are really enormous. And so you have to have companies making their own products, so the formula like you called it. And actually yesterday we saw an unbelievable first step at a collaboration between Sanofi and Pfizer to begin producing Pfizer vaccine with Sanofi's support. So companies are working towards better production of the actual material for the vaccine. And then, we saw shortage of vials, we're seeing shortages of needles. We are needing to put a lot of focus on all those additional pieces that go into distribution. Even earlier this year, we had a freezer shortage as people were ramping up to have to receive shipments of the Pfizer vaccine. So all these pieces go into huge challenges when you're thinking of the global supply chain for vaccine.
Lauren, how quickly can actually vaccine distribution and administration be ramped up to set some of the goals that we thought we would need to be at in the U.S., but also elsewhere in the world?
I think it's already happening. I mean, I think we're seeing companies commit to ramping up their production almost exponentially. And so the focus really has to be on making sure that the places that are going to be receiving vaccine have a plan to distribute, because as we've seen in the U.S. and really everywhere else, that is one of the biggest challenges, is having a space where people who are ready to receive the vaccine, who fall into the various tiers, know how to sign up, know what information they need, know where to go and what time to be there, understand the commitment of agreeing to get the vaccine, because some of the biggest challenges are if someone agrees to get, for example, the Pfizer vaccine and they don't show, you have a very, very short window to use that vaccine on someone else because it's already been defrosted and prepared for vaccination. So the scale up on the production side is hugely important, but we have to be ready to receive it in the community and across the public health entities.
Fabulous. Lauren, thanks so much. Lauren Sauer there with some smart insight into exactly how things are going from Johns Hopkins. Now, be sure to check out VRUS Go on the Bloomberg for the latest information, and tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. We'll have plenty more on Bloomberg Surveillance. I know the simulcast team has a lot more on GameStop. This is Bloomberg.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
you ready to announce today that you're running for president in 2024?
Well, that would really break some news. Your show would get more, a lot of eyeballs if you said something like that, David.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
The world has basically kind of imploded because of the pandemic.
We've wiped out key sectors of our economy, damaged them in ways that are going to take years to recover from.
This is going to be a volatile period as we look to get this under control.
The long-term damage to economies will gradually become apparent.
The public still has money in reserve.
There's clearly a bit of froth.
As long as equity prices are high enough, everybody's happy. But we can't do this forever.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. With equity futures down 0.8%, Tom Keene, I'll let you make the decision. We can talk about a $1.7 trillion name that just delivered a 14th straight quarter of double-digit revenue growth, or we can talk about a $10 billion casino. You take your pick.
Well, you can do both, frankly, John. We're going to see more of that Microsoft-like response later today. Apple and Tesla, Facebook, always going to be fascinating here, particularly the view forward out of the pandemic. But, John, I knew in Capri you were sitting on the couch going gamma, gamma, gamma.
Long GameStop. Is that what you're accusing me of?
Yeah, absolutely. No question about it. Let me say this before we get started, John. I know we're really going to have to dive into this today. It's not the same discussion, John, on radio and TV that it was with Francine Lacroix 90 minutes ago. The story's changed just in 90 minutes.
I'm itching for the Abramowitz take. What is it, Lisa?
Well, I think that the big question here is whether this is an idiosyncratic issue of just GameStop, this one $10 billion stock that started the year, by the way, at with a market value, a market capitalization of about $1 billion. It's now worth more than 10% of the stocks in the S&P 500. Yes, it is a casino. Yes, it is a specific story. And yet, how much, A, does this have an effect on the rest of the market in terms of leverage that's being pushed out from hedge funds closing out bets? We saw the biggest reduction in gross leverage among hedge funds on Monday since August 2019. Or how much, is this something that could have broader consequences and is emblematic of the froth that we're seeing in the market? And John, to me, that is the key debate that a lot of people are wondering. How much can you get a blow up in a specific name without it affecting the rest of the market?
So here's my question.
Please.
Whether this small name is an example of what we saw in late August with the broader market, the big tech players, that we had retail buying in short-dated options, Tom, and it forced market makers to buy the underlying. How much of that story is playing out here? How much of the tail is wagging the dog, so to speak? Is this a small example of something we could see on a broader scale, which I think is what Lisa is speaking to, Tom, or whether it's just a $10 billion casino that gets you some clickbait for a couple of days for the big media organizations,
it's bigger
and it
than that.
catches the hedge funds off guard? Which one is it?
Dennis Garman was brilliant on this, looking at the history, John. You can take this back to every American crisis, and John, I know you studied in school every British crisis. It's just about the leveraging up through derivative transactions, and at some point you get caught. To me, John, what is so important here, whether it's Melvin and CNBC reporting that Melvin's covered, they're short. At the end of every derivative debacle, somebody's got to pony up a cash plug, a liquidity event to cover the loss. That's where we are right now.
Is that what you're getting at, Lisa? That this could be just a small symptom of a wider story?
Well, that's the concern that a lot of people have. And Tom is talking about perhaps a Citadel of the world, which has an investment, in some of the hedge funds that are short. And yet there also is a question of some of the retail investors being brought into this and being blown out. But on a broader level, how much are we seeing the tail wagging the dog, as you say? Expect a lot of discussion about that today at the Year Ahead event that Bloomberg hosts. hosts every year is going to include BlackRock's Larry Fink as well as ex-Treasury Secretary Hank Paulson. Expect them to really deal with the consequences of ultra-low rate policies and all of the bond purchases by the Federal Reserve. A question of whether this GameStop issue is idiosyncratic or emblematic of a broader problem. 2 p.m., the Federal Reserve delivers their rate decision. 2:30 p.m., we get from the Fed Chair Jay Powell. More color around that, expecting it to be a snooze fest, save for one thing, John. I really want to know what he has to say about the froth that we're seeing in markets. How much emphasis does he put on that? How much does he entertain that versus just saying...
love your promo of Tom Keen's special a little bit later.
He'll be watching the tots.
Just killed his show. Just killed it. Carry on, Lisa.
Come on, after market, we get fourth quarter earnings from Apple, Facebook, and Tesla. To your point about the Microsoft earnings yesterday, John, and how that was really important to show that the stay-at-home stocks, the big tech behemoths, still very much in the primacy of the markets as well as the economy, with both respect to the hardware on Apple's side as well as the software with respect to cloud computing, John.
Let's get to the price action of this morning as we count you down to that snooze fest later this afternoon. That's the promo for a Tom Keen special with Caroline Hyde on the Fed.
Love that.
Can't wait, Tom.
Great.
Can't wait.
So much love.
Down 29 on the S&P 500 futures, negative 0.75%. NASDAQ futures, just to check in there. Tom, we were nicely outperforming. We've turned negative even with that huge move on Microsoft. We're down about 0.1%.
There it is, and there's going to be a lot of market punditry about is it linked into GameStop and the rest of it. You know what? I don't know where we are. What I know is we got a really important earnings snapshot of the pandemic winners this afternoon.
Should we bring in Romain Bostic, who drops by a little bit early? I don't know who does this to Romain.
He's the only one of us that's been. He's the only one of us, John. He's the only one that's actually been in a GameStop. Continue.
I'm rich.
What's happening, Romain?
Oh, well, it's all GameStop. Look, they brought me on to talk about Microsoft, Walgreens, and a bunch of other stocks that no one really cares about today, John. But look, and we talk about not only the moves in GameStop, and really the after-hour moves that we saw yesterday. I mean, I was on air yesterday when Elon Musk had that one-line tweet about GameStop, and of course the stock just took off, basically doubled in after-hours trading here and up about doubled here in pre-market trading. But there is a bigger story here. This isn't really just about the pajama traders and the folks on Reddit duking it out with the big dogs. This is about the big dogs duking it out with the big dogs. You talk about Melvin Capital and them really getting caught up in this. Sure, yeah, there was definitely a group of individual retail traders that definitely went after this short that Melvin Capital had, that Melvin Capital needed help from getting bailed out from. But there were also a lot of big players in this, from the Ryan Cohen, from the Michael Burrys, a lot of people who were long GameStop, and they were long GameStop because of fundamentals. Now, do those fundamentals get you $200 to $300 a share? Probably not.
Romain, I'm looking at it now. Maybe we can get the pre-market up here so we can take a look at it right now at 238.
Yeah.
And Romain, it's all the same, whether it's gamma, delta, alpha, beta, whatever the Greek letters that Sheldon Natenberg taught us years ago. And the bottom line is when you end up losing short, money has to appear to cover the trade. Are we at a moment this day where money is going to appear on losses?
Yeah, it's starting to look that. And look, I mean, this has been driven by the options market. You talk about those Greek letters and this type of squeeze that you see put on some of these, well, basically put on the dealers, which helps to sort of drive the stock up. If you're on the short side of that trade, then you end up like a Melvin Capital where you got to close out that position. You got to close it out fast. And a lot of times you got to find cash to close it out that's not already on your balance sheet there. So what you're seeing now here is this play out in the options market. And we always put up these charts here showing the price on the intraday stock here, but really pay attention to the volume that's out there in the options market. And I would point out, we saw record volume on Friday, something like 2.2 billion traded on Friday. I think it was 1.5 billion yesterday on GameStop. But I should point out that when you look at the put to call ratio, Tom, we're still at like something like a 2.2. So you do the math, whatever you learned back when you got your CFA 50 years ago, that tells you that right now there are actually more puts in this market than there are calls.
I don't know how Romain Bostic secures an invite back
so you have for every person out there that's betting on this stock to go higher, you got just as many people right now on the short side of this trade.
Romain, just to close this out and to sort of wrap this up, the big debate here is whether this is an idiosyncratic, I'm sure it was, you can convince him of that later, is how much of this is idiosyncratic and how much has a broader impact on the market. Yes, there are a lot of technical factors here, but how much are we seeing, for example, some of the favorites of hedge funds, the long stocks, the long positions getting sold off in order to cover these shorts, to Tom's position earlier?
There's two parts to this. I've been asking this question question of every guest here, and the general consensus seems to be that the systemic risk there to the market just is not there, that this is really confined to the GameStops and the Expresses and the Costas and a few of the other sort of short stocks that are short squeezes out there. As far as whether it's taking money away from and attention away from the Microsofts and some of the other stocks that might be getting bids here, there seems to be evidence that that is the case. Remember, this may not be the case so much with a Microsoft, but when you look at sort of the next tier down, you look at the Pelotons and the Zooms of the world that had been bid up and bid up for relatively decent reasons. There is a sense here that those stocks really aren't getting the attention right now because retail traders now are focused on what, at least for the moment, seems like easy money. Easy money.
Easy money. Yeah. I have trouble aggregating all of these angst. To me, it's just a short trade and a derivative buildup. I could be wrong on that. Romain Bostic, numerous times with us this morning here.
Thanks,
as
Romain.
we consider to look at GameStop. You know, I should point out also, folks, you know, yeah, let's promote the close. The close. 2 to 5 p.m. I'm in the middle of this. I'm in the middle of this surveillance. For all of you on radio, I'm just getting beaten up today. I just want to point out, I took the CFA so long ago, there wasn't an HP12C. I used a 1947 Kufel and Esser slide rule to get through CFA. Just barely got through it with that. Right now, someone who knows a K&E slide rule, Ben Laidler, joins us with Tower Hudson. He has been the definitive bull, courageous, at least since December 2018. You got to be in the market, and Ben Laidler has been right. Ben, I'm not going to waste your time with GameStop. I want to go to Microsoft and the signal there of their revenue excellence. Can they persist that revenue excellence after the pandemic?
Yeah, I think so. I mean, I think the significance of Microsoft and Netflix for what it's worth is just, you know, tech's not dead, right? Remember, these stocks are still a quarter of the S&P 500. We forgot about them for a couple of months when, you know, we were looking at that sort of cyclicals value rotation, which, you know, I still think is going to lead. But again, I would call this a, you know, that's a cyclical value catch-up. It's not a rotation. This has been a big reminder, I think, of the earnings power, the financial flexibility that these companies have. And, you know, you've got nearly 20% top line growth. You know, you're giving 3-4% back through buybacks and sort of dividends every year. Valuations, I don't think, are anything like maybe as expensive as they look when you sort of adjust for these huge cash balances that you know, some of these companies have. So, you know, I would definitely be leaning in that sort of cyclical sort of value direction. But, you know, don't forget those sort of tech and communications names. I think that's sort of the reminder that we've sort of been getting here. Sort of run that barbell. It's still got legs.
Ben, you're speaking to what UBS's Stuart Kaiser spoke to a couple of days ago when he said Netflix was the reminder of where the earnings growth is coming from. And what you speak to right now, calling it a catch-up, got to talk about the durability of that rotation we started to see at the back end of last year. What's going to support that? What makes it more durable when you see the earnings are coming from elsewhere? They're coming from Microsoft, they're coming from Netflix, and they're probably coming from Apple too.
Well, so I would say three things. The surprises are not. The relative surprise is still coming out of the cyclicals, the financials, the industrials. You know, the earnings power is definitely coming out of the tech names, but the surprise, you know, this sort of 20% plus beats we've had for another quarter so far in, you know, fourth quarter is coming from those cyclical names. So that'll be one. You know, the other one is just, you know, the sort of broader growth surprise, which, you know, I think we still have building here, you know, behind the scenes. I mean, you know, 10% plus GDP fiscal surplus, fiscal, you know, stimulus. I mean, we're not going to get all of that, but, you know, that's huge and very US specific. I mean, we forget in all the sort of angst of the vaccine rollout that the US does lead here. No one else is even close to 25 million doses that have been rolled out. And I think, you know, we've got J&J next week. I mean, there's potentially more sort of good news coming. And, you know, we've just had manufacturing PMI data. We're at 60. 14-year highs. I mean, you put all that together, and I think there's a lot of sort of growth tailwinds here. Long way of saying, you know, you should be looking at where do I get the biggest sort of bang for my buck for that growth surprise, and it's you know, it's out of these sort of really depressed sort of small cap industrial you know, type segments.
Ben, what would you have to see in terms of the vaccination schedule or potential hiccups in the supply chains to reassess the cyclical call?
I honestly, I think we're just really secure here. I mean, as I say, the US has done twice as many doses as any other country in the world. As I say, you've got J&J, you know, coming next week. I mean, I think the story here is really, you know, we begin to sort of work out the kinks in terms of the distribution. We approve more vaccines. You know, we get more companies, we get more factories, we get, you know, a bigger supply chain sort of working. I mean, I think as long as we're making incremental progress there, the market is just going to keep focusing sort of 6 to 12 months down the down the pipe on that sort of reopening trade, and I don't see that changing.
Ben, great to catch up. Ben Laidler of Tower Hudson Research. Ben, fantastic as always. Tom, we need to turn to what I have to say is turning into an absolute circus. It is a high-stakes circus in Europe over the AstraZeneca vaccine. Earlier this morning, the EU said that AstraZeneca would not be on a call with them today. AstraZeneca said they would, and now the EU confirming that crunch call over AstraZeneca vaccines is going ahead. Here's what's getting missed every time we have this conversation. The EU still hasn't approved the AstraZeneca vaccine, Tom.
Yeah, John, help us on Sirius XM channel 119 out in Arkansas, or frankly sitting at this desk 10022. What's a crunch call?
No idea. What's a crunch call in Europe in any crisis, Tom? But let's be clear, this is a crisis in Europe right now, securing access to a vaccine. And the big bets they made on some of the vaccine providers have turned sour pretty quickly. I think you have to go through the facts. Reportedly, they secured a contract with AstraZeneca 3 months after the UK and the United States did. They still haven't approved this drug. The UK did a month ago.
Yeah, I got to be careful, John. I got an opinion on this, and it's not what we do.
We can sometimes. We'll do it a little bit later on this program.
Yeah, Tottenham, Liverpool tomorrow.
Okay. BlackRock chairman and CEO Larry Fink. He's got an opinion. He's speaking at the Bloomberg Year Ahead conference right now. You can watch that conversation on Live Go, and we'll have highlights for you in the next hour. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Former President Trump appears headed for acquittal in his second impeachment trial. Only 5 Senate Republicans voted with Democrats to block a move to declare the trial unconstitutional. The 55 to 45 vote probably serves as a rough proxy. It's well short of the 2/3 majority that would be needed for conviction. Senate Majority Leader Chuck Schumer says he's ready to move on a Democrat-only coronavirus stimulus plan next week. That's if Republicans continue to reject President Biden's $1.9 trillion proposal. A bipartisan group of senators made it clear an alternative backed by both parties isn't dead yet, though. The lawmakers agreed there's a need for a targeted relief package. Fed Chair Jerome Powell is expected to maintain the central bank's aggressive support of the U.S. economy. That's despite having seen what he called light at the end of the tunnel from the coronavirus pandemic. Fed policymakers are all but certain to hold interest rates near zero when they wrap up their 2-day meeting today. The UK is facing up to painful lessons after 100,000 deaths from the coronavirus. Last night at a press conference, Prime Minister Boris Johnson said he was deeply sorry for every life that has been lost. But Johnson offered few answers to the question of what went so wrong over the past year. The UK now has the world's 5th highest death toll from the virus. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Republican leader dropped his demand for additional provisions on the organizing resolution and will agree to the 2001 rules that last governed the 50-50 Senate. I'm glad we're finally able to get the Senate up and running. My only regret is that it took so long.
Senator Chuck Schumer ready to go full steam ahead down in Washington, D.C. The push for unity for bipartisan talks on the fiscal side. You wonder how long before that breaks. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Equity futures this morning turning lower, down 37, Tom, off by about 1 full percentage point as we make our way towards the opening bell, about 2 hours away.
Yeah, new weight to the tape. I would point out the VIX out at a 27 level really gets my attention. That into earnings season this afternoon. Some earnings this morning as well. Right now, Emily Wilkins with us, Bloomberg Government, and as we look from the majority leader of New York out to what to do today, what to do to get into the weekend, and what to do to move into February. And I'm sorry, Emily, it comes back to the Democrat in a Republican state, the gentleman from West Virginia. How good a week is Joe Manchin having?
I think Joe Manchin is set to have a pretty good 2 years coming up, as far as the fact that he is going to be a very key player if Democrats want to get their agenda through and done. This discussion that's now come up, the potential of having a stimulus package passed with only Democrats, not something that's set in stone, but something Democrats are beginning to look into, means that a lot of people will be looking to Joe Manchin to see what he will and will not support. He's very much a key vote here.
And we got to remember that he didn't even get 50% of the vote the last time he voted. He's truly in he's in a state where it's a tough battle for him every time, isn't it?
Joe Manchin is known in West Virginia. He is a known quantity. He is able to win, and he's probably the only Democrat who would be able to win that state at this point. That's why Democrats know that they have to make sure that they're not forcing him to take any tough votes that's going to cost him his seat the next time he runs.
So given the fact that Manchin is getting a lot of dominance here in terms of his influence, what's his view on the stimulus plan? How much is he setting the agenda on the price tag, and what elements are going to be included?
So Manchin has weighed in a little bit on the stimulus. Like some other Democrats, he's a little bit leery about the high price tag that the Biden administration has put on it. He's also supportive of more targeted aid. One thing that we're seeing from both Democrats and Republicans concerned about are individuals who are making hundreds of thousands of dollars a year and yet are still in line to get funding through the stimulus. And so that's something that lawmakers want to make sure that's not happening with any future funding bill. They want to make sure that if Americans are getting direct payments, it's Americans that are really in need of it.
Emily, it's interesting the conversation we're having right now, because most people assume that if they can't make these bipartisan talks fruitful, then the Democrats can just go their own way. But going solo, you're kind of pointing out that's more complex.
I mean, it definitely is. I mean, you have a very broad, the Democrats always refer to themselves as the big tent party. And any senator and even a number of House members, if they band together, can really sort of gum up the gears here if they decide that they want to push for something specific to be or not to be in this particular bill. So it is something where, you know, it's not just Democrats can snap their fingers and get this passed. It will take time for them to negotiate within their own conference. And as you pointed out, the Biden administration and I think a number of senators are still really hoping that they can find some sort of bipartisan solution here.
Not a big fan of artificial deadlines, but is there a line in the sand, a threshold, before they start to negotiate within themselves?
The negotiations have already begun. I mean, obviously, we're coming up on the February 9th date for the start of the second impeachment trial for Trump. It's a question of how long that will last. We're hearing that it will be shorter than the last one that went on for several weeks. Although after yesterday's vote, we're hearing some Democrats call that, hey, we really need to lay out the evidence here. So last time it took almost half a year. I don't think there are many people who would place bets on exactly when this is going to get done.
Emily, you've been back in the Capitol a couple of days now to get a new feel of the new Washington. John Farrow is a foreigner, has been wonderful in his shock about how we provide aid in America. It's radically different than the continent of Europe, and I would suggest even different than London. Is there a change in tone in Washington towards a Farrow Washington versus a stridency we saw in the Trump administration?
Well, we're definitely seeing lawmakers come together in terms of vaccines. I mean, that's been one of the big things that they do think there is a bipartisan path forward is funding for vaccines, and more lawmakers are being vaccinated. So there's definitely that. But, you know, partisan tensions in Washington that were here in the Trump era, they're here in the Biden era, too. And in fact, in some ways, they've even gotten worse because you are seeing more lawmakers who are sort of at the either extremes of their party. Those extremes are growing, and there's a question about what's going to happen with the more centrist lawmakers in the middle, like Senator Rob Portman of Ohio, who announced this week that he'll be retiring at the end of his term in 2022.
Emily, you said that everyone agrees on the vaccinations. Everyone wants to get the vaccinations rolled out in a timely manner because you can put as much aid as you want into the economy, but until we stop the pandemic, it's going to be just plugging an endless hole. Meanwhile, President Biden has come out and complained that the vaccine program is in worse shape than we anticipated or expected. What are the specific steps on a structural level that he's taking to try to either organize this federally, create more consistency, and get this schedule ramped up?
So what Biden is trying to work on right now is making sure that there are testing sites across the United States. He's working with a number of private companies on this, making sure that local drugstores, your CVS's, your Walmarts, your Walgreens are going to be able to have the ability to provide Americans those vaccines. They're also trying to make sure that states have a good idea how many vaccination doses that they'll be able to get. That way they can better plan for how to give them out and how to distribute them, make sure that there are fewer wasted doses. I mean, the big bottom line here is that under the Trump administration, vaccine distribution was very much handled at the state and local level. And now Biden is trying to bring that up to the federal level and sort of have more of the federal government playing a role in vaccine distribution.
Emily, good to see you. Emily Wilkins of Bloomberg. You're down in Washington, D.C. Thank you, Emily. Equity futures down about 1% and change. We're near session lows here, negative about 43 points on the S&P 500. About 24 minutes into this program, and we have hardly mentioned the Federal Reserve, Tom Keene. It is Fed Decision Day with the Chairman Powell News Conference coming up too.
Usually when it's this quiet, John, all my radar's up. It'll be interesting to see. I was kidding Michael McKee about it, of course, who will be asking questions for Bloomberg and some of our other team. It's just a total non-event, and sometimes that's when a bombshell drops.
Is that you trying to promo it?
Yeah.
Just build it up a little bit? Was
No,
that it?
I
After
just
Lisa
been
called
here
it a snooze
before.
fest.
I mean, you
early
called it a
this morning.
snooze fest, and you're accurate. I mean, their goal
Thank you.
is to get through 2 hours and move on. I mean, for any number of reasons, including a new relationship with Secretary Yellen.
My question is, who has more influence over who at this point? Is it the market or is it the Fed? And at this point, the Fed is scared of creating another taper tantrum. They are not going to rock the boat.
Yeah.
The markets are expecting them to not rock the boat. So everybody's holding each other's hands and knows what to expect, John.
Come by our.
Yeah.
I mean, that's essentially
market
what it
hardly
is.
pushing for anything at 1% on a 10-year.
Yeah, John, we're missing the main story other than this GameStop foolishness.
What's
and
that,
it's a
Tom?
good day to talk GameStop. What a good day to talk to Robert Prince of Bridgewater,
Oh,
the
fantastic.
CIO, for you and I to recapitulate what we did in Davos, that important conversation.
Where we were 12 months ago. Bob Prince coming up on this program, Bridgewater co-CIO. Looking forward to that. I need to change the introduction at this top of this program. It's going to be alongside Tom Keene and Lisa Abramowitz, and that foreigner. Where did that come from? That foreigner.
John,
You think I was going to let that slide?
John, you've got a totally different view on income replacement and income substitution than the American zeitgeist since 1980. That's all there is to it.
I'm not advocating for a certain position either, Tom. I'm just sort
I
of
understand
highlighting the
that.
difference. And I do wonder, coming out of this crisis, how much of a permanent shift we start to see down in D.C. And just on the side of assistance provided, on the site itself, I think we've already seen that adjustment. We've redefined what a fiscal
I'll see
hawk
the
is.
allocation of the stimulus.
From New York City this morning, good morning. Futures down 40, we're off by 1%. Bob Prince of Bridgewater coming up next. Looking forward to that live on Bloomberg TV and radio. This is Bloomberg Surveillance.
China continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong, but it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York City, this is Bloomberg Surveillance. I don't know about you, but I can't wait for that snooze fest a little bit later. Special coverage with Tom Keene on the Federal Reserve. Lisa's excited. I am too, Tom. I can hardly wait. Going into that a little bit later, after the close, we'll hear from Apple. After the close yesterday, Microsoft, a 14th straight quarter of double-digit revenue growth. That's the number 2 weighting on the S&P 500. The number 1, Apple, will come a little bit later, making up about 7% of that benchmark. Coming into this morning, you'd expect that NASDAQ outperformance, but I thought you'd see it to the upside. You see it to the downside. Outperformance still, but we're down 0.75% on NASDAQ 100 futures right now. The S&P 500 futures there down by a little more than 1 full percentage point. That's the equity market. Here's the bond market. Taper talk. There's no pressure coming from this bond market whatsoever to have that conversation right now. Your 10-year yield comes in a basis point to 1.0212%. Your 30-year yield right now, 178. This is still a well-behaved Treasury market. I understand you want to hear a little bit of direction. You want some guidance from the Federal Reserve on the asset purchase program. This market's not providing that spark, that urgency for the Fed to provide it a little bit later. Yeah. That's coming later. Tom, let me finish on this. Euro dollar set up as follows, just quickly. Single currency, euro dollar 121.13, negative by about 0.4%, weaker euro. This morning, Francine Lacqua caught up with a ECB official talking up the prospect of more interest rate cuts.
John, I think you got one more board there. I mean, come on, we got to do GameStop. It's all GameStop day. And I don't
think I have GameStop.
You don't have a GameStop board?
He's banned it.
You know, there it is. Thank you so much.
Whether he likes it or not.
What does it say, Tom?
It says that it's not like it was 2 hours ago, and that's
killing
a
it for
serious
radio.
point. We have had, for radio, it's real simple. GameStop up to 365 off 147. It's come back down off headlines from 2 hedge funds that say they have covered shorts. That means it is good to have our conversation of the day for alternative investment. Robert Prince has been at Bridgewater since 1986, including the joy of August of 1998. Too many things to talk about, including how out front he was at Davos a year ago on life at the zero bound. We speak with Bob Prince of Bridgewater this morning. Bob, I must ask you not about the specifics of Melvin or Citron and the others. That's inappropriate. But Bob, you and I know when you are short and the trade goes against you and there's derivative instruments involved, cash must be involved to cover the pain. Are we at a point this morning where a lot of cash and billions is going to be moved to cover up this hedge fund screw up?
Well, the reason it's all happening is because there is a lot of cash out there moving.
Yes.
It's really been the printing of money by the central bank and the distribution by the government that's financed a lot of the activity. And, when you look at, I can't comment on the games that are being played, except to just say it's nice that the markets are kind of exciting these days. and things to talk about. But our clients want diversification, they want boring, and they want up. So that's somebody else's world.
Well, come on, Bob. I take your point, but you've been in this game too long, and I get the idea that the Fed has provided a new viscosity for the system where there's liquidity and silly things happen. The last time this happened in '98, you and I know it redounded over to major banks, into the major system. Are we at risk here with this foolishness that this will be something that folds over into global Wall Street and into our government institutions?
I don't think so. I think what you have are some isolated cases happening. The financial system itself is not over leveraged as some of these prior cases that you referred to. And so the knock-on effects are much likely to be much more limited through the system. You're going to have big impacts on individual players, individual markets, but the system is very, very liquid, plenty of capital in the banking system, and not nearly as susceptible to that. I mean, clearly the pandemic was a bigger risk to the system than leverage trades in the options markets. So, and the financial system has come through that really, really well.
I'd love your assessment on the options market right now, Bob. There's been so much discussion over the last 6 months about the proliferation of commission-free platforms offering short-dated options to retail investors and whether the tail, so to speak, is wagging the dog. Bob, what's your assessment of that story at the moment?
Well, it just reflects the liquidity that exists and the new players in the markets. Historically, it's indicative of a bubble type environment, but it could go for a long time. I think that but when you look at the underlying root causes of it, it really is the transition of monetary policies to the printing of money, from interest rate driven monetary policy to what we call MP3, monetary policy 3, which is the printing of money to buy government bonds to be distributed to people, essentially in helicopter money. And then because they're not spending it on goods and services, the money is going into financial assets. And I think from our client base is really an institutional sovereign wealth fund, pension fund client base. And I think the lesson to be learned here, the thing to be thinking about, is you really have to question the idea of holding assets based on their market cap. And the whole, CAPM-based investment process, because, just because the central bank goes out and prints money and buys bonds and drives the yield to zero and drives the price way up, does that mean you should hold more bonds because their market cap is higher? Or just because, a certain set of stocks gets a flow of money into it one way or another, and now they're, X times higher the price than they were, does that mean you should hold that many, 5 times more of it? It doesn't really make any sense from an investor standpoint. And so I think that, what we see is a big questioning around the world of really, how do you manage money? Do you start with the market cap portfolio? It also brings indexing into question, because when you're an indexer, you automatically get that, and you automatically get it. You're starting to get a much more unbalanced portfolio, because the narrow section of the market that some of these cash flows are going into is saying, well, you ought to hold more of that, right? And it's reducing the diversification in your portfolio. So I actually think I'd go the other way, and I think that probably we're moving into a world where security selection and fundamental analysis are going to be, and security selection, fundamental analysis, and a view toward real returns and wealth preservation over time is going to be a much more rewarding process.
So, Bob, there's 2 things you've really just painted there: how the cycle has changed, how the policy regime has changed, and what that means for capital allocation decisions. Lisa's going to want to jump in on the latter in just a moment. Can we just sit on how the cycle has changed just for a brief second? 12 months ago, we were sitting down in Davos together with Tom, myself, and you, in a freezing cold, and you talked about how the nature of the cycle has changed. And the headline everyone ran away with is that Bob Prince says the boom-bust cycle is done, over, but it was so much more nuanced than that. Bob, can you walk me through how the character of the cycle has changed, how what we've seen recently backs that up, and what that means for the policy regime we might be stuck in now?
Right. Well, what I said was the boom-bust cycle as we know it is over, right? And what I meant by that is the as we know it part is very important, because the world that we all grew up in was a world of booms and busts, and tightening and easing of monetary policy, largely governed by the interest rate changes by the central bank. And because of the debt levels and where we are in what we refer to as a long-term debt cycle, the ability to raise interest rates without causing problems is severely limited, but also the ability to create a boom and cut interest rates is severely limited. And so the management of an economy through interest rate changes and monetary policy, that's over. And we've transitioned into a world where the levers to be pulled is what we're seeing now, which is the printing of money, and it's the combined efforts of the fiscal government, fiscal action with monetary action, the printing of money, the issuance of bonds, and then the government distributing that money through the economy as they choose, not based on free markets where the interest rate is changing the economics of the flow of credit. Big change, and that came upon us, much faster than we expected. But we're in it right now. That's the world we're in.
And I know that Ray Dalio, your colleague, also about a year ago said cash is trash in this environment. The idea that cash is getting devalued in places like the United States is printing money. What is the trigger for that to actually be borne out?
Oh, it's been borne out. We have a massive wealth rebalancing going on right now in the world. And there's a rebalancing between the Western Hemisphere and the Eastern Hemisphere and Asia. And there's a rebalancing between asset holders and debtors. And part of that is what we're talking about. But when you look at the return of cash, we have massive wealth destruction going on right now for asset holders, which to the benefit of debtors to relieve those pressures on the debt side. We've already had a 15%. If you were a holder of T-bills or cash of some sort, we've already had a 15% decline in your real purchasing power on your assets and counting, right? Another 10 years and it's going to be 35%. You look back through history, cash is one of the riskiest assets that you can hold through environments like this. You go back to the 30s and before, you had 50 and 80% drawdowns in your real purchasing power by holding cash. That's now spread to bonds, which locks it in. So among the most expensive assets in the world are cash and bonds, and they're destroying wealth through negative real returns. And that's fueling a movement of all of that liquidity into these other assets. And it's also fueling, it will be fueling a movement of money out of dollars. It's already begun into different areas, right? We've seen gold up. We've seen the dollar down against the euro 12%, down against the yen, down against the RMB. Money is moving. You see, the money's been printed in the country, and initially it stays in the country and drives the local assets up. And then it goes out of the country at some point because the yields and the currency are unattractive. So when you look at sovereign wealth funds around the world, where are they located? Not the United States. They're located in Asia. They're located in China, Korea, Singapore, Hong Kong, Australia. That's where the money holders are. And for them to hold dollar assets is a risk position. So they're making 50, 100 basis points on their bonds, and they're taking now so far as 6 to 12% loss on the currency. Are you going to keep buying those bonds as the Treasury's issuing them? That's going to put pressure on the Fed to buy the bonds. And now what happens if we get a pop in growth and a pop in inflation, and the need to buy the bonds as the long rate is rising? Well, that's a dangerous situation for the dollar.
Let's dig into one thing that you said, a pop in inflation. What you're talking about is dramatic asset price inflation, and yet we're not seeing inflation in goods and services that's commensurate with that. How long can that divergence happen? In other words, at what point does one check the other?
Well, whether money printing causes inflation or not is simply a matter of where the money goes, right? And so far what's happened is the money that's been printed was used to augment incomes that were lost. But the money that was distributed, not all of it was spent. A lot of it was just socked away in bank accounts. And so there's been an explosion in bank deposits around the world and money market fund balances held at zero and negative real returns. And so as a result, because the money's not moving into goods and services, the prices of goods and services are not going up. The money is moving into financial assets, and you're getting inflation in asset prices where the money goes, but it's not going into all of them. It's just going into particular areas, which is amplifying the asset inflation in those particular markets. So the transition to inflation really, it's very simple. It has to be that money that's been printed or sitting in bank accounts has to get redirected to goods and services. And when it does, it's just a matter of mechanics that if that outpaces the amount of supply, then the price goes up.
So, Bob, let's put a bow on it. In 12 months of conversations between ourselves, the cycle has changed. The nature of the cycle has changed. We're in a new policy regime. The approach of the investor has got to change, away from 60-40, away from passive investing to market cap weighted indices. Let's talk about core positions, conviction trades in this market right now, Bob. What are they for you?
Well, we see a lot of things that are very expensive and a lot of things that are very cheap around the world. And then you've got your strategic mix, right? And so the most important thing is your strategic mix and to have it well balanced. And people are not nearly, they don't have nearly enough geographic diversification. We're very, very big on balancing the portfolio between particularly between East and West, Asia, US and Europe, spreading that out. And so that's the first thing. From a tactical standpoint, like I said, you've got wealth destruction in developed currency, cash and bonds, the super expensive. And then you've got a number of assets that are very cheap. Basically, we just come out of an environment of an extreme economic environment with an extreme amount of liquidity produced, and that's produced a stretching and a divergence of assets. You'll get some degree of reversion in that. So we favor Asian assets a lot. The assets, the currency, the bonds, the stocks. Just generally. Assets over there, the rebalancing in the world is going that direction, but the pricing is actually in the other direction. If you look at the forward price of the RMB against the dollar, it's discounted to fall over the next 10 years by about 25-30%, even though Chinese growth is likely to be much stronger than the US. And if you look at relative earnings growth, it's discounted to be weaker. Now that's not a matter of efficient market pricing. That's a matter of where the liquidity went. The liquidity went into U.S. assets, right? It drove the interest rate down, which drives the forward currency down and so forth. But also you see a lot of emerging economies where the combination of a down in the economy and a contraction in liquidity has driven their currency down. It's driven the spot currency down. It's driven the forward currency down relative to the spot because the interest rate differentials widen. And it's driven the equity down relative to the bonds. And so if you take the 10-year forward value of let's say a Brazilian real or a Mexican peso, or you just pick your country, 1 year's worth of earnings 10 years from now, priced in dollars, it's as cheap as it's been in 30 years. So, those are the kind of things that we see in terms of the stretching of the pricing moving one direction while the fundamentals are going to be moving in another direction.
Bob, fantastic to catch up on a longer-term call. Bob Prince there of Bridgewater. Come back soon, Bob. Always good to catch up, sir. Thank you. Tom Keene, equity futures down 46, off by a little more than 1%. The nuance in the thinking over at Bridgewater at the moment to make that trade that's not going to deliver big returns, maybe for a little while longer.
They're dealing with the artificiality of this market from a natural disaster, and frankly, John, many would say before the natural disaster, from the decisions of before. The theories that Dalio and Prince started, lived on, and prospered on, they're not in crisis. They've just changed until we get back to some normality. John, we're not there with futures negative 47. John, you haven't given me a GameStop quote in ages.
I don't intend to either, sir. You're in charge.
247 on GameStop.
Thank you very much.
Thank you.
Bob appreciates that too.
Yes, he does.
From New York, this is Bloomberg.
With the First Word News, I'm Rishika Gupta. Federal law enforcement officials are defending the pace of their investigation into the riot at the U.S. Capitol. They say they've charged more than 200 people so far, and more charges are expected. Investigators are offering a reward for information on whoever is responsible for placing pipe bombs near the Democratic and Republican headquarters in Washington. And Republican Senator Rand Paul lost a battle, but he may have won the war. Paul's bid to question the constitutionality of former President Trump's impeachment trial lost on a vote of 55 to 45. But the vote serves as a rough proxy for the eventual verdict, and it falls well short of the 2/3 majority needed for a conviction. President Biden will order another 200 million doses of coronavirus vaccines. He would also temporarily speed up shipments for states. The new purchases of Pfizer and Moderna vaccines would increase government orders by about 50% to 600 million shots. Meanwhile, a greater share of the American public wants to get a coronavirus vaccine as soon as possible. That's compared with those surveyed in December. According to the poll by the Kaiser Family Foundation, almost half the adults surveyed were enthusiastic about getting the shots. In December, only 34% were. And Ross Brewer will be the only black female running a Fortune 500 company. Walgreens Boots Alliance has named the Starbucks operating chief to be its next CEO. The sprawling drugstore empire has struggled to adapt to online competition. Brewer improved Starbucks' digital sales. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We estimate that if you can get to a faster end to this health crisis by much more widespread rollout of vaccines and therapies, we would add $9 trillion to the global economy between 2020 and 2025. And everybody benefits, including the advanced economies who stand to gain $4 trillion, around $4 trillion. So this is, a very strong economic case for doing much more now.
The wonderful Geeta Gopinath there, the IMF chief economist, speaking to Bloomberg just yesterday after raising their outlook for global growth, increasing the outlook for the United States and cutting the outlook for Europe. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Futures down 43. Tom Keene, we're off by a little more than 1% on the S&P.
Yeah, off a little bit here, a deterioration in the tape in the last hour. John, I'd really note the VIX going out for 4 big figures. Forget about the Microsoft rah. 27 on the VIX gets your attention. That is nowhere near where the level is of the markets right now. Dow down 289 points, 30,551. That VIX is out 2 big figures at least from what I would call normal. On the pandemic, Jennifer Nuzzo joins us with Johns Hopkins, and what's so important here is her focus point is, there's science, there's into the science, and then you get out of the science and you do applied epidemiology. That's what she is expert at, and she joins us this morning. Jennifer, what are your thoughts on the manufacturing, the blue-collar process of doing vaccines? Are we taking the right approach?
We're certainly, I think, making some progress. The number of people vaccinated each day is increasing, which is encouraging. I'm also encouraged to hear that survey that more people want to get it now than we maybe thought in the months prior. So I think that's a good approach. I mean, obviously there are some challenges ahead. We need to continue to control this virus by other means while we're still rolling out vaccines. And then, of course, there's the global situation. As this virus continues to circulate on the planet, even if we're protected by vaccines, we very much have to worry about the potential for the virus to mutate. And so it's really in the world's best interest for vaccines to be widely available, not just in advanced economies.
Jennifer, you said that we should control it by other means. We talk a lot about social distancing. A lot of us are sick and tired of social distancing. On Twitter yesterday, it was trending, hitting a pandemic wall. Everybody feels it. At what point will we start talking about rapid testing that you can have in your homes and other measures that perhaps could mitigate the spread as we wait for that vaccination schedule to lead to herd immunity?
Well, we should be talking about it right now. And in fact, I'm actually quite worried about the testing situation in the U.S. The cases are falling, which is great, but the number of tests has basically stagnated, and our test positivity is still really high. And when that happens, that tells us that we're likely missing infections that are out there. So even though we're rolling out vaccine, we can't forget about testing. We need to continue to encourage people to get tested. Of course, developing new tests that make it easier for people to do that is very much a priority, and it should be pursued with the same vigor that we're pursuing vaccines.
There is a line, of course, Jennifer. I mean, I was noticing there was a story out of China, and their zero tolerance has led to a random and unwarranted or just a surprise anal swabs to figure out whether or not you have the COVID virus, to detect some undetected cases previously. What's the line here in terms of privacy? I mean, how close does the U.S. come to, getting towards some sort of sufficient testing regime without crossing the line into random anal swab testing?
Sure. So I'm all for technological innovation, but we also have to consider acceptability and operational feasibility. And I'm not sure that testing approach is really our best bet.
Jennifer, I look at where we are, and people are throwing out numbers, 100 million, 200 million in that. Don't pros look more at the x-axis of we just got to do it day after day, week after week, month after month? And where does your x-axis get out to where we get a fair amount of people vaccinated? Is the Newzo number June, or is it December, or is it June of next year?
You know, my mental picture has always been sort of the end of the summer, and that's really just my hunch based on where I see things going. I mean, I very much could be wrong on that. But I heard last night that the president also suggests that by the end of the summer, anyone who wants to is likely able to get vaccinated. And I'm encouraged by that. I mean, you know, we don't yet know if the vaccines are going to prevent transmission, but we have reason to hope that they will. And if they do, in fact, show themselves capable of that, I think we'll see some big changes you know, in the coming months.
Jennifer Newso, appreciate your time this morning. Thank you. Of Johns Hopkins there. I'm not sure how we've all got a straight face still. Lisa, do you want to talk a little bit more about what's been happening in China recently?
Look, I mean, I know that it sounds ridiculous, but this is actually one of the most said stories, most read stories.
Is it?
Frankly, on the Bloomberg terminal.
I wonder why that's been shared this morning.
Oh, come on. I mean, honestly, though, this does indicate China's zero tolerance attempts at controlling the virus. Perhaps it's been effective at the same time in terms of invasive of privacy and things that really democracies are unwilling to do, really is a hallmark of their method of controlling this, John. I think that that's actually, you know, a real important point.
I think a broader point is that you are much more sophisticated and professional than I am. Lisa.
You can't say anal swab without laughing.
Absolutely not. I'm not even going to try. I'm just going to pretend you never said it. Futures down 100 on the NASDAQ, off by 0.75%. Tom, coming in this morning and seeing the NASDAQ roll over the way it has done, even with the Microsoft numbers we got after the close, going into a big afternoon for big tech, pretty interesting.
Yeah, well, it's a partition of the market. You know, I talk about the pandemic partition, John, and there's just no question about it. You see Microsoft, and we're going to see some wonderful numbers. I know you're going to tell us about Ann Maletti here in a moment, but John, you got to believe it is stresses that we see. Again, the lineup of guests we've had through the morning, Tracy Alloway, Dennis Gartman was absolutely brilliant on the history of this, and Mr. Prince with his opening comments. I refuse to believe this doesn't redound over onto market emotion. I mean, I just don't buy it. It's not what happened in '98.
I think that's the point Lisa was making about 55 minutes ago. We'll pick up there in just a moment. Coming up, Ann Maletti, Wells Fargo Asset Management Head of Active Equity from New York City this morning. Lisa keeping it together. I'm not with Tom Keene. Futures down, negative 107 on the NASDAQ 100. From New York City this morning, good morning. This is Bloomberg Surveillance.
一个就是我们看中它的那个品牌吧，它品牌就是说东西比较干净嘛，然后比较方便的话，味道也还可以的话，我觉得我会考虑吧。外卖的话呢，也是一种方式，就是品种会多一点嘛，各有它的特点吧。
这个车的话，目前我们是通过这个手机 APP 上，就手机扫码，然后微信和这个支付宝扫我们这个车上的这个二维码，大家就可以进入到一个小程序的这个界面，然后呢就可以选购自己喜欢的商品，然后付款之后呢，这个柜门会自动打开。
支付成功，请拉开右侧车门取货并关紧柜门。
然后我们会取餐，然后完了之后呢，就把餐这个柜门关上，然后整个购买的这个流程就会结束。
柜门已打开，请取出货物并关好柜门。
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
The world has basically kind of imploded because of the pandemic.
We've wiped out key sectors of our economy, damaged them in ways that are going to take years to recover from.
This is going to be a volatile period as we look to get this under control.
The long-term damage to economies will gradually become apparent.
The public still has money in reserve. There's clearly a bit of fraud.
As long as equity prices are high enough, everybody's happy. But we can't do this forever.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast on radio and TV across this nation at every GameStop store from sea to shining sea. A busy, busy news day. Yeah, it's Fed Day later. We'll talk about that. Yes, it's Tech Day after Microsoft. Great earnings there. And yes, we'll talk about GameStop as well. John Farrow, what did we learn from Bob Prince?
From Bob Prince, the cycle's changed. Your approach has got to change. The policy regime we're in might be here to stay. That's really the sum of all the parts, Tom.
He was stammering on there about the theories that Bridgewater has to confront. But, John, to be really interesting off the interest rate parity model that Bridgewater had for a year, is he got a year ago, he nailed it, and it's even worse now. It's a whole new world after all for Mr. Prince.
On the new world, though, Tom, geographical diversification. I think that's where there's been some pain over the last couple of years because if you kept it to the United States, that U.S. regional bias, that's where you got the rewards. The call that Bridgewater and Bob Prince are making it is that over time, in the next couple of years, that story is going to change.
It is a CFAE kind of factors thingy, and what do you do with geography as a diversifier? I'm not a big fan of it, but yeah, there it is, and we will see as well. Lisa, it is a crazy news day. I know you've been on GameStop since 2 a.m. this morning, taking it from 147 up to 200 when you've got out. But what else, Lisa, are you looking at this morning?
Well, I want to link what Bob Prince was talking about to the GameStop story, this idea of the transfer of wealth and that you're seeing a massive transfer underway as cash
gets devalued and it gets transferred to asset owners. John Authors of Bloomberg Opinion put out a column saying that one motivating factor of GameStop and the rally that you're seeing in the shares is anger. And it's anger from the Reddit crew basically saying, why are they benefiting so much on Wall Street when we are not in our bottom line? And we're going to stick it to the short sellers, and we're going to stick it to the hedge funds. And that is a trope underlying a lot of the commentary on Reddit. I'm not saying that's what's driving it. It's institution versus institution. But Tom, that energy is very much there.
Well, the energy is very much there. And this is one of the hallmarks, folks, on radio and TV of this show. We've done this for well over 15 plus years. When we agree to disagree, we disagree. Lisa, I totally disagree. I think it's got nothing to do with the behavioral or generational construct. It is, as Gartman said earlier, another blown massive short trade. Expert in the history of blown massive short trades, as Romain Bostick joins us now. He's with the close, but right now he's with the open. Romain, I loved what you said when you walked in our hermetically sealed studio, and you said to me that this is about the trade moving forward, and that up we go, Citron covers, Melvin covers, and now are you telling me, are you reporting to me, shorts are reinstituting?
They're reinstituting. In fact, when you look at the options market alone, there's actually more put volume now, more put open interest now than there was a couple of weeks ago. So you have a lot more people now looking at a $200 stock and saying, okay, this wasn't really fairly valued at $100. At $200, I'm definitely in it. Short interest is still high. Remember, we got up to like something like 135, 140% of the float in terms of the short interest. That's down to about 100%. But still, I mean, you think about a typical, when you talk about a stock that's heavily shorted, you're usually talking about 10, 15, 20% of the float out there.
What is it
to
now?
Be at 100% as of yesterday. And that's down from 145.
John, this is really, really important, folks. This is why we love having Romain on. John, this is critical. Take Microsoft, take all their shares, take 145% of Microsoft, and short the company.
I love having Romain on because he insults you so much.
He's almost
I'm not going to insult him.
First, I think it's wonderful. Just Romain quickly. I think this is so important. One thing that I've hated for a long, long time are the short sellers that come on programs, networks like this, and say, I've got this grand short, put out a report and smack the stock about. Have we reset the approach that those guys have been making to this market over the last several years?
I think there's going to be a big reevaluation here, because now you're talking about the idea that in the past you had this sort of asymmetry of information out there with what some of these short sellers were doing. You don't necessarily have that in the same way that you used to. The disclosures are coming a lot faster. The ability for individual traders to react on that comes a lot faster, and it just creates a completely different dynamic. That doesn't mean you're not going to have these big shorts come in and have these big shorts telegraphed, but they're going to have to structure these trades in a much more sophisticated way than maybe what we saw out of Andrew Left and Gabe Plotkin.
Too short a visit. Big earnings report today. Romain Bostick leading our coverage this afternoon as well. Looking forward to that. Right now, away from GameStop is someone who does have to deal with the volatility and the confidence of how our markets operate. Ann Mileti is at Wells Fargo Asset Management. For years, it's strong. Of Milwaukee, Wisconsin, and she joins us this morning. Ann Mileti, I want to cut to the chase. How does short bubbles, delta, gamma vortex, how does that fold over to the confidence of conservative investors?
Well, Tom, my main concern is that it actually hurts retail investors in the end, right? Institutional failures would not be good for the market in general, but the institutional players know what they're doing here. It's the retail investors that could end up getting hurt. And that's not good for our business long term. We want people to be comfortable investing, whether it's investing their own money or allowing us to help invest with the future of their money. And so that's what really concerns me about that for the long term. For the near term, it does create more volatility, but our managers are used to dealing with this, and it's fairly narrow right now, although I agree with a lot of the concerns that other people have that I worry about the spread, and I worry about the spread of it mostly because we've seen some of the broadest multiple expansion we have seen in the last 2 years.
Well, expand on that, Ann. I mean, some people talking about how this could be the trigger for a consolidation that's more meaningful that a lot of people are looking for just by virtue of some of the stocks that hedge funds have to sell in order to meet their leverage calls. What are you seeing in the market that's making you concerned that there could be some validity to that argument?
Well, what it really concerns me is just that we had a lot of narrow focus in the market during the really sharp recovery. So if you look at the S&P 500, Cornerstone Research put out a really good piece that talked about the earnings multiple increases that we've seen in the S&P 500. Now, that's a fairly, large cap focused index. But what we saw there is that the multiple expansion actually took that index up 48% over the last 2 years. If you didn't have that multiple expansion, the market would have actually been down 3% over those last 2 years. So what really should matter right now is company fundamentals. Which companies can, play the dream out, can deliver on the dream? And certainly we're seeing some companies really can through earnings. We're seeing, Microsoft's numbers. We're going to see other companies that really are delivering on earnings, delivering on cash flow, delivering on strong balance sheets. That's what our fundamental investors, our portfolio managers are really focused on.
Let's get to fundamentals right now. Guys, if you could get AMC Entertainment pre-market up just a casual, I've got it 245% higher, Tom.
For radio, it's a moonshot.
Trading at 17.
For TV, it is too.
Started 2020 at about $7. Just think about that. Pre-pandemic, a theater company was trading at $7, and right now it's trading at 17. And for the people that get all riled up about the Federal Reserve, I think it's fair to say, Tom, this story is not possible without the Federal Reserve and what they did 9 months ago.
I take your point, and it, frankly, as Mr. Prince alluded to, it goes over to what we're seeing with GameStop. It's, I go back to the physics of it and maybe the chemical engineering of the viscosity of the system. And Miletti, how does this viscosity, all this money worldwide, change institutional investing? Do you get more growthy with your strong heritage, or do you really have to stay on some form of value? And to take it further, Ann, is it some form of new value trap?
Tom, I think you're onto something there. One, it's not either or. Certainly, there are growth stocks that are delivering on the fundamentals that I talked about earlier. Some of those technology stocks have the best growth rates, have the best cash flow. They're really delivering. But on the other side, we are seeing a global recovery happen. And that is good for kind of the value space. The smaller cap names, that the manufacturing numbers that we're seeing, all of that is coming through. So for us, it's thinking more broadly about the market and investing across the board, staying focused on that, not just picking one area, true diversification focused across the board. And then, Tom, I think you're right about the value space. It's different than it used to be. Way back when I was investing early on, it was okay to invest in a company that was in decline as long as you understood the rate of decline. In this day and age, you really have to worry about secular challenges, even more so.
Anne, great to get you on the program. Come
Wonderful,
back soon, please.
thank you.
Anne Miletti there of Wells Fargo Asset Management. Do you want to check back in on that name so Lisa can weigh in on this? Because Lisa's itching to weigh in on this, let me tell you. AMC up 245% in early trading, Lisa.
I just think at some point we're going to have to start thinking about the business model of a company that's being challenged profoundly just by virtue of everyone getting used to not going to theaters at a time when they have that much more debt that they have to pay back. I mean, to your joke about a $50 to $100 ticket, in reality, I don't really see the trajectory here, John.
So is this a sign of success for the Federal Reserve, that they were successful untethering financial markets conditions away from economic fundamentals that a company like AMC could survive? Or is this a negative? Which one is it?
There's a question of whether employment in the short term leads to less employment in the long term because of a less dynamic economy. And economists are going to be studying that for a very long time, John.
Smart. And I think that's the debate, Tom.
Yeah, well, the VIX out 4 big figures, that debate is happening right now, John. I'm going to make this as clear as I can. We're all focused on, AMC, GameStop, this, that, and the other thing. Guess what? The market's got some real vol in it.
Yeah, futures down 45 on the S&P, negative 1.2%. Bid into Treasuries, yields lower by about a basis point, just above 1%. Going into a Fed interest rate meeting, which just gets a little bit more interesting, dare I say? Dare I promo that program coming up a little bit later? I think for anyone in the press pack in this news conference, don't ask about tapering. No. Just ask about what on earth is going on in this equity market. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Former President Trump appears headed for acquittal in his second impeachment trial. Only 5 Senate Republicans voted with Democrats to block a move to declare the trial unconstitutional. The 55-45 vote probably serves as a rough proxy. It's well short of the 2/3 majority that would be needed for conviction. Senate Majority Leader Chuck Schumer says he's ready to move on with a Democrat-only coronavirus stimulus plan next week. That's if Republicans continue to reject President Biden's $1.9 trillion proposal. A bipartisan group of senators made it clear an alternative backed by both parties isn't dead yet, though. The lawmakers agreed there's a need for a targeted relief package. Fed Chair Jerome Powell is expected to maintain the central bank's aggressive support of the U.S. economy. That's despite having seen what he called light at the end of the tunnel from the coronavirus pandemic. Fed policymakers are all but certain to hold interest rates near zero when they wrap up their 2-day meeting today. And the UK is facing up to painful lessons after 100,000 deaths from the coronavirus. Last night at a press conference, Prime Minister Boris Johnson said he was deeply sorry for every life that has been lost. But Johnson offered few answers to the question of what went so wrong over the past year. The UK now has the world's 5th highest death toll from the virus. For the first time, JP Morgan is planning to expand its consumer business beyond U.S. borders. Bloomberg has learned it will begin with a digital-only bank in the UK. JP Morgan will offer a mobile checking account for British customers this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Are you ready to announce today that you're running for president in 2024?
Well, that would really break some news. Your show would get more, a lot of eyeballs if we said something like that, David.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think the analog is really around how stimulus money, how loose, fiscal and monetary policy are kind of percolating through the markets.
You have natural froth in the system, and there's only so much you can do about it. Now, that causes all sorts of bubbles. Asset bubbles come and go, and there's lots of conversation about things like Bitcoin and SPACs and GameStop and other companies and what's happening.
What's remarkable to me about what's happening with GameStop is two things. One, there's no such thing as proprietary data anymore.
That was Gene Frieda, PIMCO Global strategist, Mary Erdoes, JP Morgan CEO and Asset Wealth Management, and Eileen Burbidge of Passion Capital, a partner over there. On what we're seeing in this market, and what we're seeing in this market is incredible. Futures down 39 now, off by 1%. That's the broad market story, Tom. Then you've got these billion-dollar casinos just in and around beneath the surface, and one of them this morning is AMC.
It is a casino. Well, AMC, yes, is a separate story. I think we can agree on that, John. On GameStop, as we heard Frieda Burbidge and Erdos talk about, it's a well-contained chart. I just did a very, very fancy pro chart in the Bloomberg. I'm not going to show it on TV because John will walk off the set. But, basically 147, John, out to 365, and well-contained at support at 200 right now at 213 per share. And all in all, John, I would say it's actually well behaved. And as Romain Bostic just said, will the shorts step in and do it again?
That's the GameStop story, Tom. I just think on AMC, this is a real question for Chairman Powell at the Fed a little bit later. There are companies like AMC that many people would argue would not have survived the last 9 months.
Yes.
If it wasn't for what they did. Was that the goal?
Well,
what we're seeing this morning, was that part of the goal?
Yeah, I'm not going to identify zombies, but clearly out within the zeitgeist and debate is a study of zombie companies. Part of our year ahead at Bloomberg is to identify the tumult that we're in. Our editor-in-chief, John Micklethwaite, with a gentleman from BlackRock. Here's Lawrence Fink.
In a world today where we're seeing rising populism politically worldwide, and much of that populism has been created because of people's fear of their future. They're fearful of these issues. This is why segments of society, in my mind, are fearful of this whole conversation of climate change, because there's millions of jobs that are connected to hydrocarbon industries and other industries associated. And so let's be clear, we're moving fast. Think about how faster now we're moving to EV and how quickly we're going to move to EV vans and other types of vehicles. We're moving quickly. I think technology has to move even faster. Bill Gates talks about this quite extraordinarily well, about if we are going to get to a net carbon world, it is only going to be done on the back of great technology and technology advancements. And that's why we need to be investing in these new technologies, and it's going to be through the finance of new technologies is the only realistic way of us moving forward to a net carbon world, zero world.
That issue, just to push you once again on that issue about the government, you talk about a just carbon transition. I mean, at the moment, that's slightly being left to the market. It's been left to capitalists like you, as you point out, philanthropists like Bill Gates. People are pushing in particular angles. But in a strange way, this is something surely where government, where society as a whole should be trying to make decisions about this. It shouldn't be business who's necessarily making these by themselves. I mean, there was an interesting survey by Edelman that just came out showing that people trust companies more than politicians. I mean, in some ways that might reassure you, but doesn't it in other ways make you feel rather sad?
Well, I know I'm actually quite pleased that I'm in a group of business leaders that are doing the right thing, and I think that's what the Edelman survey is indicating, that it is being recognized. Let's be clear,
but without governments doing anything, without China and America or India doing things, but nothing's going to happen. It's what you're doing makes a difference, certainly, but in the end, it's about the state.
You're right, John. what I was going to say is we need government's involvement, because what I can do is help move along public companies. If we are really going to be moving to a net zero carbon environment, all of society has to move, not just public companies. And public companies only represent a small component of the economy. Actually, governments, state and local governments, are going to have to move forward in what they do. I mean, government represents a large component of society and society's jobs. So governments are going to have to move forward. I'm indicating in my letter this year, it's not just governments, but also I'm asking, large private companies to move forward in this too. So this is something that we all have to do, and we have to do it in conjunction. And the only way we're going to be able to finance this, to finance the impact of climate change on cities and in countrysides, on the physical impact of climate change, is going to have to be done through a public-private type of investment scheme. And there's huge sums of private capital looking to invest in these type of opportunities. We need to have a large infrastructure program to prepare ourselves for this transition. And then when just like the internet, how it's changed our daily personal lives and professional lives, I believe governments worldwide are going to need to invest in the R&D of how to prepare for climate change and helping us design and build new technologies. From battery storage and the efficiencies of batteries. If we had strong, efficient, cheaply made batteries, we'd be able to transform our power grids so much more rapidly. And so there are many things we need to do. And then we need to find ways to better sequester carbon and many more things like that, and planting more trees. And this is all going to be a part of a long-term process. But it can be done with government and with business.
BlackRock CEO Larry Fink there, sitting down with Bloomberg's John Micklethwaite at the Year Ahead conference on the lost faith in governments in Europe right now. Classic case study of that happening. Tom, the protests, the riots, let's call them what they are, in the Netherlands over a new curfew and the lockdowns. We're seeing a whole lot more of it.
This is, John, why it's so good to do this with you. Not on the radar of America, but you really got to wonder where that is leading. And you saw in Gita Gopinath's conversation with you yesterday, this separation across the Atlantic is distinct.
Yeah, and I think it's weighing on the faith in the European project to some degree. Not a massive degree towards any kind of climatic conversation about breakup, Tom. I'm not going there, but I am talking about lost faith in the EU. The bureaucracy of the European Union. A little bit later today, in about 45, 50 minutes' time, I'll be catching up with Margrethe Vestager of the European Commission. And that's a question I've got for the European Commission, Tom. How do they maintain faith in bureaucracy in Brussels when that bureaucracy, many people would argue, has completely let down the continent as far as the early days of this vaccine rollout are concerned? More on that still to come. From New York City this morning, good morning, alongside Lisa Brammertz, Tom Keene, and that foreigner, Jonathan Ferro. This is Bloomberg.
Animals across the globe are dying by alarming rates. A report by World Wildlife Fund and the Zoological Society of London found that populations of mammals, birds, amphibians, reptiles, and fish fell by 68% in the last 50 years. In the tropical Americas, the rate was worse, with a 94% decline in the same period, and the size of observed wildlife populations in or near freshwater globally have fallen by 84%. Continued human abuse of the planet may lead to the collapse of the systems and resources that allow global civilization to persist in the first place. Overfishing and hunting, invasive species, pollution, habitat loss, and climate change are the main causes of this animal population crash. The report compiles evidence from 4,392 different vertebrate species and concludes the evidence for humanity's destruction of biodiversity is unequivocal. Using powerful computer models to simulate policy that stops biodiversity loss, scientists have explored scenarios to slow the trend. Such measures would include expanded conservation, increasing agricultural yields while also eliminating food waste, and cutting the global meat intake in half. By changing what the world eats and how it produces that food, nations could stop this tragic loss of life by almost 50%.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
From New York City, this is Bloomberg Surveillance Live on Bloomberg TV and radio. Bit of a sell-off to kick things off this Wednesday morning. Equity futures pulling back, going into the Fed later. Futures down 1 percentage point on the S&P 500. On the NASDAQ, you'd expect some real outperformance. You get just a little bit of it. We can't keep a bid in the NASDAQ, even with what we've seen from Microsoft after the close yesterday. Great numbers. A little bit later, Apple reporting, Facebook, Tesla as well. Switch up the board, going into the Fed. Treasury yields look like this. No big moves here. We're settling down around 1% on a US 10-year. 10-year yields coming in about a basis point. On a 30-year as well at 178, just north of 1%, call it 1.02% on a US 10-year right now. But this is where I want to finish, guys. I want to finish on AMC. Ask yourself this. When was the last time you watched a movie in a theater? Have a think about it. I'll tell you where this stock was in 2020, January 1st. About half of where it's trading right now. The stock is up by 200% and change in the pre-market. And Tom, this goes back to the Fed, and I think it's so important. This company comes out earlier this week and talks about raising $900 million, putting off to the side the idea of bankruptcy. Most people would come on this show now, I think. In fact, I'm just going to say it, I know. And they would argue that companies like this would not exist if it wasn't for the help of the Federal Reserve in the last months. Bottom line. Now, I'm not saying they're responsible for this price action, up 200%. Some people might make that argument as well. I'm just saying the idea, Tom, that this trades at twice the level of where it opened 2020, when many people can't answer the question I just asked 2 seconds ago. When was the last time you watched a movie at the theater? Up 200%. Tom?
Well, a spike up, a melt up in AMC, and right now a little bit of an erosion in GameStop as well. 208, it's right, sitting right exactly on support. A break under about 198 would be a big deal. We're not there yet. Where we are is 8:30 Wall Street time, and that means Michael McKee, our Bloomberg Economics and Policy and Rude Questions to Powell correspondent, and he joins us not on the Fed. We'll get to that in a moment. Michael McKee on the state of our durable America.
Well, durable goods orders are out for the month of December, Tom, and it is a perfect example of why economists generally don't focus on durable goods all that much, especially on a month-to-month basis, because durable goods orders come in up 0.2%. The forecast was for a 1% gain. However, it's not all bad news. The real news is that it is better than expected, or just about as expected, in terms of capital goods, which is the sort of proxy for business investment, up 0.6%. The forecast was for a 0.5 gain, and the prior month, November, was revised up to a 1% gain from a 0.5% gain. So businesses are ordering. What happened with durable goods headline orders? Boeing happened. A 51.8% decline in new orders in the month of December for Boeing, for civilian aircraft, shall we say, which is pretty much Boeing. And so that's dragged down the overall number. The ex-trans number up 0.7%. So durable goods orders, not too bad when you look at the revisions and when you look at where we are with business spending.
Mike, as we push forward to jobless claims tomorrow and to retail sales on Friday, what are some of the key measures that you're looking for that possibly could dictate policy or have some sort of implication for people who are still looking at something called fundamentals?
Well, if you want to look at what might change policy, it's really going to be inflation. And we do get the inflation number, the PCE monthly number for January, we get, or for December rather, we get next Friday, this coming Friday. And that's going to be an important figure to watch. Now, it's not going to tell us anything right now. The Fed's on hold for a considerable period of time. But we are going to see some increase in inflation in both the PCE and CPI because of base effects starting in March and April. And the Fed is going to have to look through that. They probably will. So it's really the fall when you start looking at what happens with inflation and what the Fed's going to do next, because they've basically tied everything to that right now. Now, interesting headlines out on the Bloomberg terminal. Ray Dalio speaking at a conference, of course, the founder of Bridgewater, says that he sees a pickup in growth and inflation, and the Fed may have to buy more bonds later this year. So, you know, if you're watching the markets, those are the fundamentals you're going to want to pay attention to.
Michael McKee, very quickly here, we got huge news flow right now, and Catherine Mann waiting from Citigroup. Michael McKee, the news flow moves at light speed. Is the press conference a snoozer today, or can you and your other brethren assembled, can you ask sharp questions to get some clarity forward?
We can ask sharp questions, but whether we get clarity forward is kind of an open question. I think the press conference and the meeting itself will be more remarkable for what they don't do and don't say than anything else. The Fed wants to stay out of the way right now because they're basically on hold. The one thing Jay Powell wants to avoid is another taper tantrum. When you look at what happened back in 2013, auto and home sales took a breather when the Fed taper tantrum happened. They want to keep the economy going, so look for Jay Powell to be as inoffensive as possible.
Michael McKee, important at 2 o'clock today. Thank you so much. John Farrell, very quickly here. They're going to quarantine in hotels in London. Is that feasible?
Don't know if it's feasible. They're certainly trying to do it. We've seen it happen elsewhere, so clearly it can be done, Tom. Seen it in other countries across Asia. The UK will try it too. These are the headlines. Arrivals from hotspots in the UK to isolate in hotels. The quarantine to last for 10 days. The Home Secretary to set out the details shortly. What's more remarkable, I think, Tom, is that it is January 27th, 2021. And we've been doing this now for about 10 months. And the UK, which is an island, has finally caught up to the idea of doing these kinds of things. All the more remarkable for me, coming into this year, is that the bar for these kind of restrictions to be removed, Tom, is getting higher, not lower, even as this vaccination program rolls out. And you see it in the stocks of Ryanair this morning. Ryanair down by about 4 percentage points over in European trading. The airlines were hoping for a better year. That better year hasn't started yet.
The VIX out 4 big figures, 27.01, futures at -44. Catherine Mann needs no introduction, global chief economist at Citigroup, and she owns the phrase codependency. Catherine Mann, we are all codependent now on this terrible pandemic. As John mentioned, it seems like the timeline is getting longer and longer. How does that adjust your economic view of the world and of America?
Well, so, you know, we in terms of our projections, we have a base where we don't get to herd immunity in the advanced economies until the end of the year. So end of this year. And so in our fundamentals, we always have had a very long process to get from, discovering a set of vaccines to actually changing the economic performance of the economies. The markets have tended to collapse all of the links in the chain. There's no problem with manufacturing. There's no problems with logistics of distribution. There's no problem with getting people to get vaccinated. There's no problem with changing a behavior. There's no problem with business investment responses, and there's no problem with opening those borders. The markets have taken all of those links in the chain, which we think are important and are going to delay recovery until the end of the year. They have all collapsed those into one and done. Discover and everything is happening great. So when we see pullbacks in the market is because there is a realization that there are these links in the chain from getting a discovery of vaccines to actually changing economic performance. They're starting to realize that.
Catherine, I'd love to get a little bit more nuance than that as well.
Yeah.
Just another headline coming from the Prime Minister in the UK, Boris Johnson, England aiming to reopen schools from March 8th.
Yeah.
So some of these restrictions will come off before we get to herd immunity. Do you draw a line in the sand as well? So if herd immunity for year end is what you anticipate, what about the restrictions being slowly removed as well?
Well, so the restrictions that really matter are consumer behavior. Now, schools opening, that's certainly very important. That allows some people to go back to work who have not been able to go out of the house to work. And so that will help. But until people's behavior really feel comfortable to go back to doing the things that they used to do, especially on the leisure, hospitality, and tourism side, that represents 10% of global GDP. And it's basically flatlined. So you've got some work to do on that before you get to the improvements in economic performance that we put into the end of the year.
Well, if you looked at AMC stocks, you wouldn't necessarily have that feeling of people not going to the movie theater.
Well, but they're not going, right?
Well, they're not going. And this actually goes to a question that we were all talking about a couple minutes ago, this idea of to what end are we keeping some of these companies alive by having them get increasingly indebted, incurring debt for a bridge to the other side? Yes, at cheap rates, but with business models that are going to be challenged, or at least that are going to be changing in a post-pandemic world. What kind of employment are we preserving now? What is the longer-term cost to employment and productivity?
So this question about zombies has been out there for a long time. So the issue is not so much employment, because of course they're not really employing a whole lot of people right now with the theaters being closed. So the question is what happens next year? Not this year, because we're still going to be in a position of a lot of backstopping of the markets from the Federal Reserve and from fiscal policy. But next year, when things start to look more normal, at least we're assuming that that's the case, then you're going to have the hammer come down on some of those companies. And that will be creating turbulence for sure in financial markets. But the objective is when you get to the other side, you can handle that turbulence and you don't have to be, holding up the zombies any longer.
Catherine, always great to hear from you. Thank you. Catherine Mann there of Citi, the group's chief economist. In this market right now, let's not lose sight of this. Going into the opening bell, there's a real weight to this tape, as you would say, Tom. We're down 47 on the S&P, off by about 1%. We're coming in about 2 basis points on a 10-year, just about above 1% on a 10-year maturity in the Treasury market.
Yeah, well, there's the weights of the tape there, but it's got correlations in. I'm waiting for the 10-year yield to go through 1%, John. We're not there yet, but that would be important. Even the 2-year yield fractionally gives way, John. These are subtle signals.
Subtle signals, not huge moves, Lisa, but I think are fascinating nevertheless after you see that blowout report from Microsoft yesterday after the close. Not enough even to keep the NASDAQ in positive territory going into these earnings later.
Yeah, is it buy the rumor, sell the news? Is this just a matter of people liquidating positions to try to gird themselves for turbulence from existential or exogenous shocks? Read Reddit. I don't know, John. I do have to think about the turbulence and the concern that some entities, hedge funds, have in order to preserve capital and cover margin calls.
I'm leaving in a second. Do you want to find a word on AMC going parabolic?
I think we've said everything that there is to be said. My question is, when are they going to raise money in the equity markets to pay down their debt?
Okay, that headline coming to a terminal near you soon. Maybe. I've got no insight on that. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Popcorn's certainly relevant for that stock this morning. A little bit later this morning, looking forward to catching up with Margherita Vestager of the European Commission on a conversation on the absolute failure at the start of this vaccine rollout on the continent. Big news for Europe. From New York City this morning, good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Federal law enforcement officials are defending the pace of their investigation into the riot at the U.S. Capitol. They say they've charged more than 200 people so far, and more charges are expected. Investigators are offering a reward for information on whoever is responsible for placing pipe bombs near the Democratic and Republican headquarters in Washington. Republican Senator Rand Paul lost a battle, but he may have won the war. Paul's bid to question the constitutionality of former President Trump's impeachment trial lost on a vote of 55 to 45. But the vote serves as a rough proxy for the eventual verdict, and it falls well short of the two-thirds majority needed for a conviction. And President Biden will order another 200 million doses of coronavirus vaccines. He would also temporarily speed up shipments for states. The new purchases of Pfizer and Moderna vaccines would increase government orders by about 50% to 600 million shots. Meanwhile, a greater share of the American public wants to get a coronavirus vaccine as soon as possible. That's compared with those surveyed back in December. According to the poll by Kaiser Family Foundation, almost half the adults surveyed were enthusiastic about getting the shots. Back in December, only 34% were. And Roz Brewer will be the only black female running a Fortune 500 company. Walgreens Boots Alliance has named the Starbucks operating chief to be its next CEO. The sprawling drugstore empire has struggled to adapt to online competition. Brewer improved Starbucks' digital sales. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
China continues to be, recovering well. And with the opening up that was decided at the last five-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
China has clearly behaved in ways that are anti-competitive, dumping cheap steel and aluminum into America, which hurts American workers and hurts the ability of our companies to compete. So should I be confirmed, I plan to be very aggressive to help Americans compete against the unfair practices of China.
Whatever your politics, she is from a most interesting state, the giant state of Rhode Island. Governor Raimondo, of course, vetted for Secretary of Commerce. An interesting selection. It'll be fascinating to see how she drives forward the debate, particularly dovetailing into the second stimulus, which is widely presumed to have infrastructure, and I assume all the money will go to fix I-95, which is the disgrace going through Providence as it is. Lisa Bramlett and Tom Keene, we welcome all of you this morning. It has been a morning where we have just frankly not relaxed. The news flow has been extraordinary. And Lisa, I want to go away from full faith and credit, 1.01%. When you have these liquidity shocks in the equity market, what does high yield and IG do?
Well, right now, absolutely nothing. I mean, basically, you've seen pretty much flatlining with actually high yield outperforming investment grade, which has been a little bit more stuck by the rate rise that we saw a couple of weeks ago or days ago. I guess that's been reversed as people get more risk averse. But I got to say, the stability there goes to what we're going to hear from the Federal Reserve today at 2 p.m., 2:30 p.m. Stay tuned for the special with Tom Keene and Caroline Hyde. The snooze fest that's actually underpinning this entire market and keeping that constancy and allowing the likes of AMC to raise tons of money in the debt market.
Well, they're going to raise tons of money, and it's going to come in, as you know, we saw with AMC, and you wonder what the others do. But, you know, I'm going to bring up right now, Lisa, you know, you talk about the cash that's out there, and we've got a function, the weighted average cost of capital. It looks great on radio. And the bottom line is Microsoft has 5% debt. I mean, these giants are successful, and Lisa, you've just got to believe all of the 10 billion yesterday that they're going to move cash out to shareholders. Schiffman of Bloomberg Intelligence talking about perhaps a Google dividend this week.
This is the reason why the big tech behemoths continue to do well, continue to lead the market, because they are constant. They have cash, they make money. Whereas you have the rest of the market, the cyclicals that have been incurring more debt and have potentially more questionable business models when things re-emerge from the pandemic. Catherine Mann of Citigroup, I really think that what she said was notable and important to emphasize here. This idea that right now, building the bridge to the other side, these companies are not employing that many people. They're not being truly tested. Once the pandemic is over, and it may be a longer process than people are currently pricing in, that's when the test will happen. That's when markets may see some turmoil.
Lisa, you and I are seeing this. Lisa and I live like 1 block away from each other. We walk different ways so we don't cross paths. But, you know, you and I are seeing this. Before this pandemic, there was what I'm going to call a technology, education, service sector partition. And it's been accentuated in the pandemic. I saw that. I got my hair cut, as you can notice, yesterday.
Looks beautiful.
And on radio, it looks phenomenal.
It's the best.
I got my hair cut yesterday. Thank you, Frederick. And, you know, they're keeping it together. You know, it was like $4.45 for a haircut.
The new economy is going to look different, and a lot of people are worried about the exacerbation in inequality and wealth inequality. And that goes to what Bob Prince is talking about, the wealth redistribution, and how that gets manifest in the economy after remains to be seen.
Do you see a wealth redistribution?
You can see it in all the data. You can see it in who's on the unemployment rolls, but that gap has been plugged by a lot of the unemployment benefits that have been passed by Congress. And the question is how long that will last and which jobs will be available. Yesterday, I was hosting a conference on logistics as with the developments there, and a lot of the investment is in automation, right? So even though Amazon has been one of the biggest employers through this entire pandemic, they're working on trying to automate more of the jobs. There still will be plenty of work within these particular distribution warehouses and the trucking services, but it will be for a higher skilled employee, and that is a big fundamental question facing the economy.
And Lisa, what I would point out here, which is just so darn important, is not the present stimulus bill, 1.9 down to whatever it's going to be. Let's say it's 900 billion, whatever. They're going to migrate that number out. The moment that bill is done, we have to decide as a Washington and a nation, do we want a second bill wrapped around policy? And I understand we don't know any indication of that. When will we? My guess is in March and April, we're going to really begin that discussion.
Remember when we had Infrastructure Week about a decade ago, and then again about 9 years ago, and then again 8 years ago? I guess we're going to have that infrastructure discussion yet again in a couple months.
Gina Raimondo on there from Governor of Rhode Island as well. Right now to wrap up strong here for my morning here on television and radio, I'll continue with Paul Sweeney. Tracy Alloway joins us after watching GameStop through the morning. Tracy, we talked to you at 340, 365, whatever, and we've come down, and there's different headlines in that. Do you have any visibility in your research of the number of shorts that are out there?
Well, I mean, you can identify short interest fairly easily. I think you can do it in front of Bloomberg. Unfortunately, I am not sat in front of my terminal right now. I think probably the interesting question to ask is at what point do those shorts capitulate? So we saw CNBC, for instance, reporting recently that Melvin Capital, the hedge fund that did have a very big short position against GameStop, was closing out that particular trade. We don't know if it's completely closing it out, but, you know, something like that. And then the other thing to take a look at is the price of the call options. So, you know, some of these weekly call options have gone from $2 to over $70 in just the past 3 days. And that's the kind of dynamic that's going to put real pressure on the shorts that remain.
Tracy, quickly here, what will you watch for through the rest of this day?
So I would watch for any signs that the retail momentum in GameStop is actually flagging. So if you have hedge funds closing out the shorts, that might be one reason that the squeeze could lose some of its momentum. And then the second thing I would really be watching out for is the next Wall Street Bets target. What are the Redditors on that particular forum actually looking at?
Interesting.
There's talk about BlackBerry. There's talk about AMC. So where will the Reddit hive mind go to next?
And AMC with a moonshot that John Farrell mentioned today. Tracy Alloway, too short a visit. Thank you so much for your contribution this morning. Lisa, lots coming up. I believe David Weston talking with Mr. Moynihan. Mr. Moynihan's got to look at GameStop.
Yeah, what, in order to get in? You think he's on the Reddit chat boards?
I don't know if he's on the Reddit chat boards, but I'm sorry, this redounds back to major banking as well. I just refuse to believe this is discrete to short selling and the rest.
No, it's definitely institutions getting in on both sides of the issue and playing the Reddit boards as well. I mean, this is a new game. And the question is, how much do banks want to associate themselves with this, especially eventually, not in the near term necessarily, but eventually when things normalize a little bit more, Tom.
Off of support on a pennant formation, GameStop bounces up right, busting up against resistance at 225. Coming up later, Bank of America Chief Executive Officer Brian Moynihan. The Fed decides today at 2 p.m. Futures at -40. The VIX moves 4 big figures, 27. Good morning.
focusing on is not so much what goes inside the cars of the future. So they're not working on doing a self-driving car or an autonomous vehicle themselves, but rather they're focusing on the surroundings. So everything that's going to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops. Infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, stay on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so forth.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York City for our audience worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes until the opening bow. Futures down 1 percentage point on the S&P 500. We begin with a big issue. Markets on edge. Ahead of a busy day on Wall Street, investors bracing for impact, preparing for a Fed decision, big tech earnings, and more stimulus talks out of Washington, D.C., with President Biden pushing his fiscal spending plan, saying it's crucial to the vaccination effort.
It's going to require Congress to pass the American Rescue Plan to provide funding to administer the vaccines, to ramp up testing, to help schools and businesses reopen, and deliver immediate economic relief to Americans who are in badly need of it.
Senate Majority Leader Chuck Schumer preparing to move forward on a relief package with or without Republican support.
The Senate is going to press forward on another COVID relief bill. We want to work with our Republican colleagues to advance this legislation in a bipartisan way. But the work must move forward, preferably with our Republican colleagues, but without them if we must.
Let's bring in the Bloomberg team to set the table for a very busy day on the street. Bloomberg's Emily Wilkins on GameStop, Michael McKee on GameStop, Kaylee Lyons on GameStop. No, Emily, don't worry. Down in Washington, D.C. on the latest fiscal stimulus talks. Emily, where are we? Just walk me through it.
So right now, Democrats and Republicans still want to come to a bipartisan agreement on Joe Biden's $1.9 trillion stimulus plan. They're looking to streamline that plan. They're looking at potentially doing a smaller or more targeted bill. But Democrats are also getting prepared to go at it alone. Remember, they can use a procedural move to pass coronavirus stimulus without any Republican votes at all. They are looking to potentially do that. The date that's coming up is March 14th. That's the date that expended benefits for unemployment insurance run out. So lawmakers are poised to do it before then. However, it's a big question whether they'll make that deadline. Remember, the last stimulus talks went on for months, and there still is hope that there can be some sort of bipartisan compromise. A group of Democrats and Republicans met with top White House officials yesterday, and we're still waiting to see what the result of those negotiations might be.
Emily, thank you. That's the fiscal conversation. Michael McKee, the Federal Reserve conversation, that news conference, a little bit later, 2 p.m. decision, 30 minutes after that. That news conference just got a little bit more interesting, didn't it?
Certainly there are questions about financial stability, but this meeting is going to be more about what the Fed doesn't do and Jay Powell doesn't say. They've got monetary policy just about where they want it right now, and they want to avoid any missteps. You look at what just came out from the Chicago Fed. They released their weekly financial conditions index, and financial conditions are getting looser, even though the yield curve is rising. The yield curve moving up on thoughts that we're going to get more growth and perhaps more inflation this year, and that would be good news for the overall economy, but it isn't affecting market perceptions at the moment. One interesting question will be for Jay Powell, how do they formulate an exit strategy? Remember, he said that the Fed would be telling the markets well in advance that it might think of tapering, but we had Bill Dudley say they're going to get a taper tantrum anyway. So what does he say? Here's what they don't want. When Ben Bernanke announced that they would be perhaps thinking about tapering back in 2013, we saw the market rates go up, and then autos and housing sort of took a powder. And so that's something that Jay Powell really wants to avoid. Now, we do have a couple of people on the tape this morning, Ray Dalio and Larry Fink, saying we should get more inflation this year. That'll be an interesting story to watch because we had a market, we had a base effect in March and April of last year where inflation just dropped off the table because of the pandemic. And so when those fall out of the data, we're going to get some more inflation. Will the Fed look past that? That's the question. I guess Ray and Larry taking a position on that. We'll see if Jay Powell will even bite on that question.
Mike, that's not going to dominate this conversation. That chart, come on, let me put up this chart. Never mind GameStop. AMC up by almost 300% in early trading. Mike, how does the chairman respond to a question about AMC up 300%, a company that some people would say does not exist without the Fed's assistance?
Well, I guarantee you he's not going to talk about any individual company, but he's probably going to say the Fed is monitoring the markets, and they're not really good judges of froth, but they are taking a good look at whether there are financial stability questions. I was thinking about what Emily said. You get that $1.9 trillion from the federal government, you could buy some GameStop.
You could. You could buy some AMC, apparently. Some people are doing that. Kaylee Lyons on top of this story. Hey, Kaylee.
Hey, John. Well, there is so much noise around the GameStop and shorted stock story that no one really seems to be paying attention to the fundamentals or the fact that Microsoft posted its 14th consecutive quarter of double-digit revenue growth last night. 17% jump in sales, topped even the highest analyst estimate. The cloud business, of course, a huge part of that story, jumping 50% in the period. And it was good news, too, from Advanced Micro Devices. Fourth quarter beat, gave an upbeat forecast. Investors, though, not excited this morning with shares down by about 3% in pre-market trading. It may be a case of the good news being priced in, John, because AMD currently trades at a forward PE multiple of 51 times, enjoys a very lofty valuation, just like the other mega caps that we will be getting results from after the bell tonight. Apple, Facebook, and of course Tesla, all on deck after hours. And if you take a look at their premiums respectively, forward PE ratios of 23, 34, and 210 times. That, of course, that last one is Tesla, which is an entire league of its own. But the point of the story, John, the question is, how good is good enough in these results to justify these lofty levels? Because there is a lot of froth in tech at the moment. And speaking of froth, we do have to get back to the market story of the moment. Froth may not even be a strong enough word. Bubble may be more apt for the phenomenon and what's going on with GameStop. Shares are up another 60% in pre-market trading after rallying 90% yesterday. It is those rabid day traders on Reddit who are exerting their power in this equity market, buying up those short-dated call options, forcing short sellers to capitulate and close out their positions. It is retail, not the hedge funds, that are in control here. GameStop, of course, is the poster child for this phenomenon, John, but it doesn't stop there. As you rightly pointed out, we're seeing the same thing play out with other heavily shorted stocks like AMC. I'll put it in the words of my producer, Pete Dioteris. He says shorting stocks right now is about as safe as disassembling explosives, John, and I will leave it at that.
I think that's fair to say. I think that's fair to say. Kelly, thank you. GameStop's yesterday's news. AMC up by 297%. This company earlier this week borrowed $900 million and put off bankruptcy. This stock is trading at double in the pre-market where it started 2020. And I asked a little bit earlier on, about 40 minutes ago, when was the last time you watched a movie at a theatre? I had about one response to that question. No one else can seem to remember. And yet this stock is trading at double where it started 2020. And a lot of people would argue, many people would argue, this company probably wouldn't have survived this pandemic without the Fed stepping in and keeping financial conditions so loose that they were able to raise debt in capital markets. This news conference a little bit later gets a little bit more interesting as this day grows older. Joining us now is Tiffany Wilding, PIMCO Chief US Economist. Tiffany, I'm not going to ask you about single names, but I do want to ask you the following question. How on earth does Chairman Powell respond to some of these questions? And would he see this as a sign of success, that companies that would otherwise have gone out of business are still around, alive and kicking?
Well, I think I would say this. In terms of equity markets, of course, the Fed is not going to look at single names, and of course, I think we know things can squeeze from time to time. But I think what the Fed's going to look at is more the equity market in aggregate, and really what they care about is what they call equity risk premiums, or the additional yield that investors need to take on equity risk. And if you look at that, it's not at extreme levels looking historically, and they're going to want to see more extreme levels to say, yeah, there are financial stability risks here, and I just don't think we're there yet. Now, if there's different ways to calculate equity risk premiums, but if you look at forward earnings, you can see that again it's not at extreme levels, and part of that is just because the market is expecting some pretty decent growth this year. So are we, and growth in earnings. So some of this I think is appropriate, in terms of overall markets, but of course there are underlying stories here that might be somewhat of a stretch.
Yes, some $10 billion casinos that everyone seems to be playing roulette in on a daily basis at the moment. Tiffany, do you think they just see this as the downside, maybe, to a broader effort which is generating results in their view?
Yeah, exactly. I think ultimately what they want to see is the economy moving in the right direction. And in order to do that, you need financial conditions that are loose. And of course, financial conditions include equity markets. And I think it's really important to remember here that current conditions in the U.S. economy are actually still quite weak. We saw in December, some pretty weak data coming from the labor market. Retail sales, for example, were not very good in December as well. And that's clearly because we have a resurgence in the virus, or as we did then. So of course markets are forward looking, and they're very excited obviously about the vaccine rollout, the possibility that we get back to normal this year, additional fiscal stimulus. But I think what Powell is going to try to be doing, at least today, is try to balance the fact that the U.S. economy is still weak. It needs financial conditions to remain loose now to continue to provide that sort of base for the economy to improve in the future.
To do that, do you think they then need to provide some clearer guidance, a threshold perhaps, on what we'd need to see for them to remove accommodation on the asset purchase program? Tiffany, we have very clear guidance over rate policy, less clear, much less clear on the asset purchase program.
Well, so I think it could be advantageous to, sort of define what substantial progress is. So, if you remember back to the FOMC statement in December, they said they need to see substantial progress before they change current asset purchases. But I actually don't think Chair Powell is going to try to address these things today. And the reason I say that is because, although the outlook has improved as a result of greater fiscal stimulus expectations and things like that, I think there's still enough uncertainty around the timing of fiscal stimulus, around the timing of vaccine distribution, that Powell's probably going to take a little bit more of a wait and see approach. I think the last thing Powell wants to do, is upset the bond market in any sort of, taper tantrum type event. I don't think that it's necessary that we have a taper tantrum event. I think what the Fed can do when they do decide to, to start communicating on changing, on tapering or changing their asset purchases, is they can just remind markets that the underlying real neutral interest rate in the economy is still very low. So that will anchor longer term interest rates, or at least it should. So that, plus, kind of early and detailed communication, I think can certainly thwart any sort of bond market, indigestion from tapering talk.
It is mission make it boring a little bit later down in Washington for Chairman Powell. Tiffany, thank you for your time. Always appreciate it. Always smart, always sharp. Tiffany Wilding there of PIMCO. In this market right now, GameStop up by 65 whatever percent. AMC up a cool 400 percentage points Abigail Doolittle on top of the stocks moving ahead of the opening bell. Hey, Abigail.
Hi there, John. Well, it is insane. This rally that we're seeing in some of these message board day trading stocks just absolutely continuing. As you mentioned, GameStop right now in the pre-market up about 40%, or excuse me, 60%. If you bought it, though, at 5:45 a.m., you were looking at a stock that was at 365. So those traders are now down 35%. This game is not for the faint of heart. And there's AMC, really incredible, up more than 350%, almost 400%. Earlier this year, John, just a few weeks ago, this was a $2 stock. Now it's a $20 stock. Folks really wondering what this is means, sign of the times in terms of the Fed liquidity, the froth, the FOMO, desire to be in on these stocks. A lot of it having to do with options, as Kaylee was talking about, having to buy the calls, squeezing the shorts out. However, if we go into the Bloomberg terminal, we are going to see that the puts are on it now too. Puts absolutely soaring just recently on GameStop. So some traders are preparing for the other side of that, perhaps Newton's third law, what goes up must come down. Let's remember, this is a brick and mortar store. A lot of people saying it's a dying technology. It's going to be interesting to see how this one ends, John.
Unreal. Much more coverage still to come going into the opening bell. Abigail, thank you. Coming up, a standoff developing between the EU and drug maker AstraZeneca over vaccine delays. We'll catch up with the European Commission next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
In the case of the euro area, we still have strict containment measures in place. The virus resurgence is leading to a decline in mobility, which is much more than what we're seeing in the US. And that's part of the reason why, because we have a downgrade for the first quarter in the euro area.
The IMF's Gita Gopinath discussing the pandemic's impact on the Eurozone, the crisis deepening amid complications between the European Union and drug maker AstraZeneca. For more, let's get to Bloomberg's Maria Tadeo out of Brussels. Maria, what is going on?
It's a very difficult question to answer because there's a lot of moving pieces here. But fundamentally, John, this is a clash between the big pharma and big government. AstraZeneca recently took the European Union by surprise, saying that it's been hit by a production glitch, and that means that deliveries to the European Union could be majorly cut. Now, the European Union is responding, saying that they are not accepting this, that this is not good enough, that they paid money up front and they want their shipment to be made on time. But ultimately, there's a number of issues here, starting with the contract. This is confidential. A lot of the information that's in it, including the numbers, they're private. We don't know what's in it. And it's also further complicated by the fact that this vaccine that's made by AstraZeneca, it's not actually approved for public use in the European Union at this point. It will be on Friday. That's the expectation. But I guess the bottom line, if you remove all of the heated language and the headlines and the confusion this morning here in Europe, the point here is that the European Union is really starting to get nervous about deliveries. They know that they have to vaccinate people quicker, and they know they have to do it faster. So they worry about being undercut on the vaccines, and they worried about not being able to get the same amount of their neighbors. That's really the story.
Maria, thank you. Real reason to worry in the continent right now. And I'm really pleased to say that giving us some of her time, Margrethe Vestager, the European Commission Executive Vice President. Commissioner, thank you for being with us today. And I think we've got to start with a really important topic. What has gone wrong?
It's a pleasure. Thank you.
With the vaccine rollout in Europe? What has gone wrong?
Well, all resources, they are now focusing on figuring out, well, what has gone wrong? Because indeed, to the level from me, of course, to our president, everyone is focusing on getting the doses out to people who really, really need this. There will be a press conference very, very shortly where all the different details, they will be explained.
Talking about the internal issues at the European level, Commissioner, I'd like to sit there just for a moment. Is this European bureaucracy that has slowed things down, or is this all AstraZeneca in your view?
Well, one thing I can tell you, this is not an issue of bureaucracy. This is an issue of delivery. And I think you can rest assured that my colleagues dealing directly with this, they do everything they can to make sure that the contracts made, that they are being lived up to.
So help me understand this. Why were the contracts made reportedly 3 months after they were agreed at the UK level, at the level in the United States, with the same manufacturer? Question one. And question two, this spat is happening before this drug has even been approved by the European Union, when the UK approved it 1 month ago. What's happening there?
Well, I think I'm as interested in these answers as you are, but this is not, I'm not what we call chef de file. It's my colleague, Stella Kyriadis, who's dealing with this, and she is answering, I think, a number of questions in a press conference that will actually be starting in, I think, 8 minutes.
I look forward to that news conference in 8 minutes. We'll bring the headlines on this programme, but Commissioner, you did say that this wasn't down to European bureaucracy, but if it's taking longer to approve these drugs, if it took longer to approve these contracts, how can we look past European bureaucratic red tape slowing things down? Surely that's a factor in all of this, Commissioner. Can't we sit here and just acknowledge that as other countries are moving on with the rollout of this vaccine program in the UK, in the United States, Europe is slowing down. And I think there's a real worry for some people right now that this is eroding faith in the European project. Commissioner, what would you say back to those people now?
Well, of course, one should acknowledge things that are true. But if things are not true, I think it's really important to tell the story as it is. And you can only make the approval for the marketing of vaccines when you have good numbers, when the clinical tests, they are actually backed up by the data to show that this is a safe vaccine. Because people need to know that the question of approving a vaccine is not a question of bureaucracy just turning the wheel. This is a real thing. This is going through the numbers and making sure that this is safe. And we have to vouch for what we're doing here. We have an independent authority as well as in other jurisdictions in the world, and they will have to vouch for the numbers. Because one of the important things, and we've been discussing this for months in Europe, is of course to create the trust in people that these vaccines, they are safe. Because otherwise people will say, no, I better wait. And if people start waiting, once the vaccines become available, well, then we don't get the immunity that we all need in order to move both our economy, but also our society out of this crisis.
It's a really important point, Commissioner, that you're making to address the point that the European Union has taken a whole lot longer to approve these vaccines. What about the earlier point I made, though, that it took an extra 3 months to secure the contracts? And how can European nations right now make the argument that they should have equal access to this vaccine when they were 3 months late compared to the UK and the United States? Now, I'm not sitting here advocating for the UK or the US right now, Commissioner. I just want to understand the European argument at the moment with the German government pushing the idea that maybe we should stop exports of some of these vaccines going out of the European Union. What's the argument when the EU secured a contract 3 months later? And you are the competition chief as well, the antitrust chief, Commissioner, and I just wonder how we answer that question at the European level at the moment.
Well, it's not necessarily just a question of when the contracts they were finalized, because the finalization of the contract was in order to be able for member states to place their orders. And their orders have been placed for a very, very, very long time. We have concluded the same kind of contracts now with a number of people developing, a number of companies developing vaccines in order to be able to vouch towards the European citizens that no matter who is first, vaccines will be delivered. That is the nature of all the contracts that has been concluded. And what I think is important is that now when the CEO of the company in question is being very, very open about how he sees the contract, that he, of course, is willing to discuss it also with us, because the transparency of this process is, of course, the most important thing. And this is why I think for the next hours, a lot more detail will be put out in a transparent way for people to be able to judge themselves.
We look forward to receiving that detail.
And the second thing is that
please do, carry on, please
these are giant companies, and what we need is, of course, that you can conclude this kind of contract. And I think one thing is a given, and it is that no individual member state could have done the same thing as we have done in common, because the strength of the European response is the fact that we do this in common, and that ministers of health and heads of state and government, that they come together and say, of course, we have a contract, we want things delivered.
Commissioner, thank you for your time. And I know typically you and I would talk about other issues, but I think this is the issue on the continent right now. European Commission Vice President Margrethe Vestager there. Up next, the Analyst Action. This is Bloomberg.
That was either illegal or caused disruption. This was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The opening bow just around the corner. Futures taking a dive. We're down 0.7% on the Nasdaq, even with Microsoft delivering some really bigger numbers after the close yesterday. The S&P 500 down 0.9%. It's the stories happening on the periphery that have got everyone's attention, though. GameStop to the moon and back. AMC. When was the last time you went to an AMC theatre? That stock is double where it was when we started 2020. We'll talk about that in a moment. Switch up the board into the bond market a little bit later today. Fed decision, news conference, Chairman Powell, Tom Keene, Caroline Hyde. Nice little show a little bit later. I can tell you that news conference, the subjects have changed. It's not about tapering anymore. It's going to be about froth. Froth in this market. Where is it? Is it in concentrated parts? Do we need a healthy correction? I'll save that for the sell side strategists. There's the bond market, yields in 2 basis points to 1.01%. In foreign exchange, euro weakening up, 121 on euro dollar, coming down 0.4%. GameStop flying, AMC flying. Abigail's got the names and the numbers. Hey, Abigail.
Hey there, John. Well, it certainly is a wild morning, an overall risk-off tone. If we start off with big tech, though, you wouldn't really know it. And that, of course, is because Microsoft put up a huge blowout December quarter. They beat sales estimates and earnings estimates in a big way. Sales growing by 17%, the 14th straight quarter of double-digit gains. They also beat profits in a huge way, so double-digit growth there. Strong on gaming, not surprisingly, and the cloud strong as well as folks are stuck at home. After the bell, of course, it will be Apple, Tesla, and Facebook. Everybody wants to know whether the iPhone 12 is a big deal. Facebook, very interestingly, they haven't put up a record high since August, so let's see what they put up. But right now, this is somewhat of a pocket of strength. As for some other big movers on the day, the reason we have the risk-off tone, Walgreens, however, is actually going with the risk-on tone. That stock is trading higher after they hired Rosalind Brewer from Starbucks, the only Fortune 500 black female CEO. So there's one gainer. However, other earnings movers to the downside. Texas Instruments, their view not great. Boeing, they took a big charge. AT&T, the cable and subscriber numbers not quite where folks want to see it. The big story, though, John, the wild story, really kind of perhaps a piece of the risk-off tone, because everybody wonders about the moral hazard of it. The AMCs, the GameStops that you're talking about, up in a huge way. GameStop now, again, a double on the day. Simply incredible, up about 800% over the last 12 days. AMC today, right now, up 240%. 15 minutes ago, John, it was up 400%. So folks are making and losing a lot of money. Again, that froth, this question of what's next, and also, of course, regulation of some sort. It's really simply amazing, John.
Hard to know where to start, isn't it? Do you start with a $5 billion stock called AMC? Do you go to some gaming shop and talk about that? Or do you talk about a $1.7 trillion name in Microsoft that delivered a 14th straight quarter of double-digit revenue growth? Right now, I know where the attention is for the broader market. You know where the earnings are coming from. You know where the revenues growth is coming from. It's coming from the big tech players. After the bout today, we'll hear from Tesla, Facebook, Apple. A little bit later into next week, Amazon, Alphabet. Don't know why Twitter's part of the mix, but I guess it still is. Ed Ludlow joining us now for more from San Francisco. Ed, the big names are reporting that's not where the attention is this morning.
Yeah, look, mega cap tech stocks, going into this earnings period, we knew that we would see outsized profit growth from those mega caps, right? The 5 big names, Apple, Amazon, Google, Facebook, and Microsoft. You know, Microsoft reporting earnings after the bell last night. We got our first indication of that EPS of $2.03, 30% EPS growth year on year. That is the story. Those big cap tech stocks underperformed in the second half of 2020, and how that story has changed in the last 3 months or so. You know, I'm looking at some specific movers today as well, with Apple in mind, because they're reporting after the bell. Corning, a supplier, beat on fourth quarter revenue and gave a pretty bullish forecast for first quarter revenue. That bodes well for Apple coming after the bell, right? We know what the story is there with Apple. Come with me into my Bloomberg and look at this terminal chart, because it tells a very clear story. Expectations from analysts for Apple are very high. This could be the first $100 billion revenue quarter for Apple. And as you know, John, it's all about the iPhone 12 super cycle, right? You and I have been talking about this for a little while, the expectations tied to 5G. But if you look at that consensus for revenue, then it looks like we could now be hitting the mark with the iPhone 12. Other expectations as well as around earnings being, as I said, in line with those mega cap tech stocks, outsized earnings growth relative to the S&P 500 for Apple.
Ed Ludlow, thank you, sir. Tesla in the mix as well a little bit later. Apple, Facebook. Joining us now is Bob Michael from JP Morgan Asset Management, the CIO on a fixed income side. Does a whole lot more than that and more. Bob, great to catch up. What on earth is going on in this equity market this morning, Bob?
You know, I wish the bond market had the kind of volatility and activity that you're seeing in equities, but I think we're doomed to a very docile trading range, narrow credit spreads, and the Fed being a non-event today.
Do you think the credit story is part of what we're seeing in the equity story with the likes of AMC, Bob?
Yeah, without question. And, you know, I think Ollie Ren, bless his soul, hit the nail on the head last week when he said that they need to retain favorable financing conditions to households and companies. And what he was saying is, we're going to manipulate the cost of funding until we get through this crisis. And companies like AMC are going to make the decision to access that funding and give it a go, see if they can come out on the other side. Now, not every company has made that decision, right? You have a string of retailers that just decided it will be a different world on the other side, and they've headed to restructuring.
Some people won't let me call this price fixing, Bob. I won't call it price fixing. Just read my mind. Is that what it is, Bob?
It's not quite price fixing, but it's price guidance.
Okay.
And we saw the bookends, right? You know, we saw, you know, Raphael Bostic just muse out loud that we ought to be able to talk about tapering by year end. And that was when yields in the 10-year were about 0.9%. So yields went up over 1%. As soon as they got towards 120, then other Fed governors stepped in and said, no, you misunderstood everything. We're going to be here for a while. So they've guided us to a range that we know they're comfortable with the 10-year above 1%, but not above 120. And I think that's the kind of environment we're in.
Just to take a step back quickly, 6 minutes into the session, these moonshots that you're seeing, these parabolic moves in GameStop, AMC, it's not reflective of what's happening in the broader market. The Nasdaq's down by 2% despite what we got from Microsoft after the close yesterday. The S&P 500 is off by 1.65% as well. And we get central bank after central bank talking up more action, Bob. Here's the ECB. Officials were said to see the markets underestimating the rate cut odds, and according to our reporting, officials agreed to push back on that. Now, Bob, walk me through your long career on Wall Street, London, elsewhere, your approach to fixed income, how that's had to change in the last several decades to where we are now, Bob. Just the approach, how you look at markets, valuations, if they even matter.
Well, I started in the Volcker era when he had raised rates from 5% to 20% in a couple of years. And for most of my career, it's been about central banks telling governments to adhere to fiscal austerity, spend what you need, but everyone needs to be vigilant on inflation. And it's just gobsmacked me in the last 10 months how modern monetary theory has become the generally accepted norm. And quite simply, in crises, the role of government is to borrow, issue debt, and spend it in trillions of dollars And the role of the central bank is to buy it and ensure that the cost of that debt is affordable until you come out the other side. Now, we'll see what happens a year from now when we come out of the other side, but it's not something I've seen before, and it's not something you can fight.
Something that was hard to stomach in Europe for a long time, Bob, is that rates can stay at levels that you don't think they should stay at, and they can stay there for a long time. Not just on the sovereign side, as we see the US 10-year break 1% again, but also in the credit market as well. Bob, you know the stories. Companies in Europe that just weren't doing that well and were borrowing at 0%. Bob, are you willing to extrapolate that out a little bit and extend it to, say, the United States credit market? Is that what we've got in store, just a market that might not make sense, but you've just got to learn to live with it?
I think we have it in store for the rest of this year. And I think until the central banks feel that the economy is able to stand on its own 2 feet and companies are then able to go back and negotiate with lenders what a fair rate for borrowing is, they're going to intervene. So I do expect that somewhere down the road, I don't know if it's 12 months or 24 or 36 months from now, we're going to go back to what the bond market used to be. It used to be a borrower between lenders, us, and borrowers, governments, households, and companies on what the appropriate level and cost of funding should be for the risk that we're taking.
So, Bob, you're saying this commitment to credit that you've got at the moment is really constructive, I have to say, to risk assets, to EM, to corporate credit as well. Are you saying there's a window later this year where things could change quickly and rapidly and in the other direction?
They could. I don't think it's going to happen. I think the central banks learned over the previous decade, if they move monetary policy too quickly, then you start to have tantrums, and then financial conditions indicators tighten, and they're back to providing liquidity. I think they're going to start the dialogue and try to figure a way to normalize markets, but it's going to take years, not months. We'll see if they can pull it off.
Okay, final question, Bob, and then I'll let you run. I know you've got a busy morning. Most important question anyone will ask you all day. Are you more comfortable with the credit market or Liverpool's title hopes?
Sadly, I'm more comfortable with the credit markets. I think that just too many injuries and one win in their last 7 competitions across all different levels.
Not good. I'm enjoying it a little bit, I have to say that, Bob. Great to catch up. Bob Michael of JP Morgan. Thank you, Bob. Appreciate it. Let's get back to the market desk. Abigail, what a day.
What a day, John. These markets are so wild, it's hard to keep up because what we have on the one hand, the S&P 500 down sharply, its worst day since the end of October. On the other hand, you have these crazy stocks that are double on the morning after climbing in a huge way. So let's set the stage with GameStop because over the last 12 days, look at that, up 1,700% in 12 days. It's just inexplicable, quite frankly, between the options action, the FOMO, the liquidity situation out there. You could really paint the picture of this being irresponsible. But as we know, it's not just GameStop, because today the big mover is AMC. Interestingly, earlier this morning, as you know, it was up 400%. Now it's up 250%. People bought this stock at $23 earlier. It's now at $17. People are making a lot of money and people are losing a lot of money. Really frothy environment. As for the risk off, though, in this frothy environment, the moral hazard, the question of how could it be, the big movers to the downside today are all of those big tech names, including Alphabet down 3.4%. Tesla reports today after the bell. AMD put up a good quarter. PayPal put up a good quarter, but folks are selling those names. The fear perhaps coming again from this froth. It doesn't make sense to veteran traders that retail traders, message board traders, these day traders are in control of the market. And again, a risk-off tone overall, John.
Abigail, thank you. Thank you very much. The broader market story not getting enough attention. Bit of a downdraft, a correction on the S&P, the NASDAQ, and a move lower. Yields lower on the 10-year, south of 1%. Coming up, the Biden administration tackling trade tensions with China. President Joe Biden catching up just yesterday evening with the NATO Secretary General Jens Stoltenberg. We'll have that conversation with the Secretary General next on this program. This is Bloomberg.
Are you ready to announce today that you're running for president in 2024?
Well, that would really break some news. Your show would get more, a lot of eyeballs if we said something like that, David.
China has clearly behaved in ways that are anti-competitive, dumping cheap steel and aluminum into America, which hurts American workers and hurts the ability of our companies to compete. So should I be confirmed, I plan to be very aggressive to help Americans compete against the unfair practices of China.
The President's Commerce Secretary pick vowing aggressive measures against China's, quote, unfair practices. President Biden catching up with NATO Secretary General Jens Stoltenberg less than 24 hours ago. And I'm pleased to say that NATO's Jens Stoltenberg joins us right now. Secretary General, thank you so much for joining us, sir. Thank you. How did the call go?
Thank you so much for having me. The call with the President yesterday went very well. I have the privilege of knowing President Joe Biden when we worked together in our previous capacities. He as Vice President of the United States, and I am as a Prime Minister of Norway. And I know President Biden as a very strong supporter of NATO, our collective defense clause, Article 5, one for all for one, and the bond, the cooperation between North America and Europe. So I look very much forward to working with him and also to welcoming President Biden to the NATO summit in Brussels later this year. Because as long as we stand together, North America and Europe, we are able to deal with all the uncertainties, the more unpredictable world we all are faced with.
Do you think we are standing together on the key issues of this moment, namely Russia, namely China?
On the main issues, we stand together. Of course, there are differences and sometimes also disagreements. And over the last 4 years, we have seen some disagreements on issues like climate change, trade, and so on. But I think now with the new Biden administration, there will be a new chapter in the transatlantic relationship, in the cooperation between North America and Europe. And a strong NATO is good for Europe, but it's also good for the United States, not least in addressing the security consequences of the rise of China. China will soon have the biggest economy in the world. They already have the second largest defense budget. They're investing heavily in new military capabilities. But North America and Europe in NATO represent 50% of world's GDP and 50% of world's military might. So we stand together, then we are safe.
How do you think you can shape the strategic security goals of countries like China and Russia if we still maintain such deeply ingrained, deeply embedded commercial ties with them?
Our aim is not to isolate them. And speaking about China, we also see, of course, opportunities related to the rise of China, their economies, for our markets, for trade. But at the same time, there are some serious challenges. And what is relatively new is that we address those challenges not only as individual allies, but as NATO together. We need to invest in technology. I welcome the fact that all NATO allies now for the first time are actually investing more in defense. That's the best way also to maintain our technological edge, that we are investing in new capabilities, artificial intelligence, autonomous systems. We need to address our resilience. We see that China is investing heavily in infrastructure, 5G, and so on, especially in Europe. We are developing new guidelines for how to make sure that we have safe and secure infrastructure. And we need to stand up for our values. We see how China is violating core values for NATO, freedom of speech, in democratic values in, for instance, Hong Kong, and the way they treat minorities. So standing together with other like-minded democracies is also a way to address the rise of China.
Secretary General, it's not my job to advocate for any particular view, but I think we can both agree on those issues. I think where we can also both agree is that sternly worded press releases just aren't enough if you're going to maintain commercial ties with some of these countries. And you make the point, the argument that you can't isolate these countries, but I would make the counterpoint that for a country like China right now, Why should they listen to anything we've got to say about any of their internal behaviour, their internal policies, around what the previous administration called genocide in the northeast of the country, when the likes of Germany are still so concerned about their commercial ties? And I'd extend that to Russia as well. The former president, Donald Trump, who you got to know, also made the point that Germany can say one thing about Russia. On the other hand, it's still got this massive energy deal, and Nord Stream 2, as I understand it, the pipelines are still being laid again. So, Secretary General, I just wonder, at some point, don't we have to make a really tough decision? It's one or the other, and we can't do both.
Well, even during the Cold War, even during the times of the Soviet Union, the Warsaw Pact, and Joseph Stalin and Brezhnev ruling in Moscow, we didn't have a full economic blockade. And I don't think that's the right thing to do today either. It's a very different time. But we have imposed economic sanctions, also targeted sanctions after, for instance, the aggressive actions by Russia against Crimea, Ukraine. We have also imposed economic sanctions after the assassination of a former Russian Skripal case in the United Kingdom, and so on. And we are ready to, as allies in NATO, in EU, in the G7, to impose sanctions again. Yeah. But we are striving for a better relationship and also for dialogue with Russia, because we need we believe in what we call a dual-track approach: deterrence, defense, and dialogue. We don't want to isolate Russia.
What's the evidence, sir? And I don't know the counterfactual, of course, so forgive me, but what's the evidence, sir, that that approach is working?
First of all, we have kept all allies safe and secure. We have been able to preserve peace in Europe for more than 70 years. That's an unprecedented period of peace in Europe. You have to remember that Europe, war was a kind of the normal situation. And after the end of the Second World War, we created some institutions, including NATO, with the sole purpose of preserving peace. And we have achieved that. Second, the aggressive actions we have seen against Georgia, Ukraine, very serious. But those actions have not been opposed against NATO allies, who have also been former Soviet republics, like the Baltic countries or Poland, who has been part of the Warsaw Pact. So I think the greatest success of NATO is that we have been able to preserve peace, freedom for all allies, and actually that we have been able to now welcome more allies, more countries into this alliance, and by that also spreading freedom and democracy throughout Europe.
Jens Stoltenberg, fantastic to catch up with you, sir. Please come back soon. NATO Secretary General. From New York City this morning, good morning. Your equity market rolling over. We're down 2% on the S&P. Your NASDAQ is off by 2.2%, even after a blowout quarter again from Microsoft. A little bit later today, this afternoon, after the close, the team running you through big tech earnings, results from Tesla, Facebook, and Apple as well. Some heavyweights on deck a little bit later. This market corrects, though. Your 10-year south of 1%. The Fed a little bit later. And I keep saying it, that news conference just gets a little bit more interesting as the day grows older. Your trading diary's next. This is Bloomberg. really can't think of another day where we've had a 2% move in some of the benchmarks and it's been ignored for $5 billion, $10 billion stocks because they're going parabolic. But here's the move. It's real. We're down 2.7 on small caps after an explosive move higher at the back end of last year. On the S&P 500 down 1.9 and a bit of underperformance versus the S&P on the NASDAQ, surprisingly, after those Microsoft results. We're down 2% there. That's the story. A downdraft, a correction. The focus is elsewhere at the moment, though, on some single names. Let's get to your trading diary. What you need to be watching this week. The White House COVID response team giving an update at 11 a.m. Eastern. President Biden delivering remarks